Okay, good morning, everyone. Welcome to Baiju's Exam Prep IAS. This is Sham Kagoria. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? Let me know that I'm audible so that we can start the discussion. Okay, done. So, yesterday, what we have done? Yesterday, we completed the concept of banking, chapter of banking, and we started with the concept of budget. Now, what's a budget? Budget, in simple terms, it's annual financial statement. Although we do not use the term budget in the Constitution of India, under Article 112, you use the term annual financial statement. So under Article 112, right, every year, Government of India is supposed to provide an annual financial statement. So budget is basically an annual financial statement provided by the government on the floor of the parliament. In budget, what we do, right, we basically provide the details of how much Government of India would be spending. Again, I'm focused on Government of India. How much would be the total expenditure incurred by the government in the next one financial year, and how much would be the total income collected by government in the next one financial year. Right, the basic idea is the government has to withdraw the money from consolidated fund of India, right, consolidated fund of India, and for that they would require the approval, the permission of the parliament. And that is the precise reason yesterday, I hope you remember, we have come across one document, one bill, that is the appropriation bill. Government would introduce appropriation bill, get it approved from the parliament, and once it is signed by the president of India, government will be allowed to withdraw the money from consolidated fund and spend money. On the other side, government will also be able to impose taxes, sell certain assets owned by itself, and collect money, income, and that is provided in the form of basically the finance bill. And yesterday we have seen how the budget is prepared actually. Please remember the name of the division. Remember this, the budget division which functions under Ministry of Finance, or budget division which functions under Department of Economic Affairs, and Department of Economic Affairs functions under Ministry of Finance. Okay. So it is this budget division which will prepare the budget documents, and once the budget documents are ready, these are signed by the finance minister, then these are introduced in the parliament. And basically in the parliament, this is how, right, once it is introduced, there is a discussion on it. Then there is a standing committee, right? Standing committees will look into all of these expenditures to be incurred by the government. They will approve this, then these will be sent to, that is basically approve means they will give a report on this to the parliament. Now there is a detailed discussion in the parliament, and once a detailed discussion based on the demands for grants will take place, these are passed. Then we have appropriation bill, and appropriation bill is passed, sent to Rajya Sabha. Rajya Sabha will pass it, send it to President of India, and once President of India will sign, that basically government will be allowed to withdraw funds. So this is where this is so far what we have discussed in yesterday's class. Now let's start. Let's go forward. Now, whenever you talk about budget, pure economics now, understand. Henceforth, we'll start discussing purely economics. Sir, what do you mean by pure economics? For those students for whom polity is over, I'm pretty sure you can understand when I say lot of these concepts you already have learned even in polity classes. Correct me if I'm wrong. A lot of these concepts you have already learned even in polity classes. So there's a slight overlap in the beginning, but now it's purely economics, right? You would not have learned about this in polity classes. This is purely economics now. Whenever you talk about budget, budget can be divided into two parts. Whenever you talk about budget, budget can be divided into two parts. One is called as a revenue account in the budget, and the second one is called as capital account in the budget. Understand all these concepts very carefully. One is called as a revenue side or revenue account in the budget. Second one is called as a capital account in the budget. Now, what is the basic idea? How do we differentiate between what is a revenue, what is a capital? Simple idea. Whenever, please understand this, it is going to increase or decrease asset or liabilities of government. Whenever the transactions are going to increase or decrease the assets or liabilities of the government, we classify them under the concept of capital account. Any difficulty, please do let me know right now. Whenever it is going to increase or decrease, the asset or liabilities of Government of India will classify them under capital account. Many of you will ask me, sir, what do you mean by that? Let me ask you a very simple question. Government of India sold Air India. Please tell me now. Government of India, couple of years ago, sold Air India. Now, when government will sell Air India, don't you think the assets of Government of India will come down? Please answer. Wake up now. Start. Right? Start participating in the classroom. If Government of India will sell Air India, don't you think the assets held by Government of India will come down? Of course, yes. So now can I simply say, if government will sell the companies owned by it, right, any amount they will receive, I will have to write it under capital account. All of you will agree? I'll have to write it under capital account. And this is called as disinvestment. This basically is called as disinvestment. What do you mean by disinvestment? Whenever government will sell certain assets and collect money, that process is called as a disinvestment. Now, how they will do it, right? What is the purpose? Is there any problem with this? Any new policy related to this, etc., etc.? We will understand it later. Please do not worry. Okay. Now, let me give you one more example. Government of India will spend money and construct a road. Government of India will spend money and construct a road. Please tell me, is Government of India's assets going to increase or not? Simple question. Do not complicate it. Please do not complicate it. Keep it always simple. Third, government will issue bonds in the market and borrow. Third point now, Government of India will issue bonds in the market and borrow from the market. Please tell me, will the liabilities of government change or not? So I hope you understand. So whenever these transactions are going to change assets or liabilities of the government, we will keep it under the concept of capital account. On the other side, there is a revenue account. There is also a revenue account. What is the basic idea of revenue account? Any transactions which are associated with day-to-day activities of the government. Any transactions which are associated with the day-to-day activities of the government, day-to-day governance activities, right? These are associated with the revenue account. For example, let me know, taxes. Very simple example, taxes. Don't think Government of India will collect taxes on day-to-day basis? Because of government activities done on day-to-day basis, don't you think government will collect taxes? And please tell me this also. Many of you will say, sir, no, sir, income tax they will collect once in a year. Don't do that. But simple question to you. Even if they collect a tax once in a year, does it change any liability of Government of India? Do you think the taxes collected by the government, they will pay it back to you? Of course, no. Right? Nothing will be paid back to you. So any transactions that are done, right, or any income collected, expenditure done because of government activities on day-to-day basis and which are not repaid, which will not change any asset or liability of government, these will be kept under revenue account. These will be kept under revenue account. Another example, subsidies. Agreed? Another example, subsidies. Don't you think government during the course of day-to-day activities will provide lot of subsidies to the people? Let me give you another example. Salaries paid to the government employees. Salaries which are paid to the government employees, right? So basically these are the kind of transactions which are kept under the revenue account. Now I'll go forward. Please understand, do not complicate it. Keep it always simple. Basic idea is any transaction that will either increase or decrease the asset or liabilities of government, will keep it under the capital. And if it is not going to change any liability or change asset of Government of India, will keep it under the revenue account. Now revenue account, revenue account are going to be further divided into two parts. Revenue account will be further divided into two accounts. Capital will be further divided into two accounts. One is called as a revenue expenditure and second one is called as a revenue receipts. One is called as a revenue expenditure and the second one is called as a revenue receipts. Same thing you do for capital. Capital I'll write directly capital expenditure, capital receipts. Capital expenditure and capital receipts. Okay. This is receipts, capital receipts, and this is capital expenditure. Okay. Capital receipts and capital expenditure. Can we go forward now? Can we go forward? Anybody has an issue with regards to the classification of budget account? Receipts means income. Receipts means income. Are Baba, if I've written two parts, expenditure and receipt, right? I hope you understand. One is basically going to lead to outflow of money. Another one is going to lead to inflow of money. Receipts is income. Expenditure is outflow. That's it. How subsidy can be a revenue? My dear, subsidies do not create assets for the government. I hope you understand. Subsidies do not create assets for the government. Are they liabilities for the government? Those are asking this question, please do let me know. Do you think subsidies are liabilities of government? Or is somebody saying yes, subsidies are liabilities for the government? Who said? How can you say subsidies are liabilities? Please tell me. How? Liability means you'll have to repay. You'll have to pay the money. Right? That is right. That is must for you. Subsidies are liabilities for the government. How? Right? Who said? Have I ever said subsidies are liabilities? Let me give a very simple example. Very simple example connected to current affairs. Have you come across MSP? Let me know. Have you come across the term MSP, minimum support price? I have not discussed that. I know that. Don't tell me, sir, you have not discussed. I know that. But in the current affairs, at least once a week, the term MSP is mentioned in the Hindu newspaper. Do you think MSP, Government of India must pay MSP? Is it a constitutional burden on the Government of India? Is there any law which says MSP should be paid by Government of India? Absolutely no. Please remember this. Absolutely no. Right? There is absolutely no duty for the government to pay MSP. It is not a burden for the government as per constitution. Government of India, through its executive authority, announces subsidies. I hope you understand. Through its executive authority, pays MSP. Right? So I hope you understand. Subsidies are not a compulsion for the government. Subsidies are expenditures incurred by the government. It's not a liability. Okay? So do not create confusions here. Keep it always simple. And if you keep on arguing, I'll simply say, ask Government of India. This is a classification done by government and it is right. It is right. You don't worry about it. Okay. Now, revenue receipts, capital receipts. Let me start discussing from the receipt side. Let me start discussing the receipt side first. Now, receipts means what? Basically, the income. Revenue receipts are those incomes which are received by the government from all the sources during its course of government activities. During the course of government activities, how much money will be collected by the government? This is called as revenue receipt. And have a look at this. These receipts do not create any liability for the government. Do not create any liability for the government, or these will not lead to reduction in the asset. Please by heart all of them. Please by heart all of them. Revenue receipts do not create any liability. They do not increase liability, nor do they decrease assets held by the government. Now, second one, capital receipts. Second one is capital receipts. These create a liability, or these will reduce the assets held by the government of India. For example, I said, what if government of India will issue bonds and collect money? Simple question. What if government of India will issue bonds and collect money? Can I simply say government is collecting money today, but it is going to create a liability for the government of India? Liability means what? There is a debt you will have to pay at certain point of time. On the other side, what if government of India will sell LIC? What if government of India will sell, right? Let's say Steel Authority of India Limited. Right? What if government of India sells Air India, Modern Foods, Maruti, etc.? It will reduce the assets held by government of India. So these are obtained by the government by raising funds through borrowings, recovery of loans, and disposing of. Disposing means selling of the asset. Right? This is basically the revenue receipt and capital receipt. Now, I'll come back to this previous slide. Don't worry, but please make an observation. Please make an observation. I'll write the numbers now. You'll have to focus now. I will write revenue receipts as 1, recovery of loans as 2, disinvestment as 3, borrowings as a 4. Now, please make an observation. This is a very simplified version of budget receipts. Please make an observation. Can I say the total receipts? I'll write in a separate slide. The total receipts of Government of India are 1 plus 2 plus 3 plus 4. 1 plus 2 plus 3 plus 4. Any difficulty here? Total receipts collected by the government are 1 plus 2 plus 3 plus 4. Anybody has a difficulty? Now within this, I'll basically divide them into two parts. I'll call these as debt creating receipts. How? Arey Baba, what are you listening to then? What are you listening to? Two of the students are asking how total receipts are 1 plus 2 plus 3 plus 4. What are you listening to? What are you seeing? I absolutely have no idea. Early morning, but please wake up. At least now you'll have to wake up. If you ask me how total receipts are 1 plus 2 plus 3 plus 4, then I'll have to teach you mathematics. Is it not revenue receipt 1? Receipt is income, right? Recovery of loans is 2, disinvestment is 3, and borrowings 4. I said total receipts is 1 plus 2 plus 3 plus 4. Anybody has a doubt how 1 plus 2 plus 3 plus 4? Let me know. Does anybody have a doubt how can I say total receipts is 1 plus 2 plus 3 plus 4? Arey Baba, listen, no? Right? Wake up now. Wake up. Right? Listen. Second, within this only, I will call a debt creating receipts and non-debt creating receipt. What do you mean by debt? Debt means simple. Any receipt which will lead to an outflow of money in the future. Simple. Right? Debt means any receipt that you're collecting today which will lead to outflow of money in the future. Now, please have a look at it. Please have a look at all the four, 1, 2, 3, and 4. Please tell me, out of all the four, which of the receipts are going to create a debt for Government of India? I'll repeat the statement. Please make correct observations. Do not complicate it. Please make correct observations. Out of all the four, which of these receipts are going to create a debt for government? Debt, I hope you understand. Debt means you will collect the money today and you will make the payment in the future. Very interesting answers I'm getting. My dear, you will collect taxes and non-taxes. Let me ask you a very simple question. Let's go one by one because many of you are actually confused here. Right? Do not have confusion. It's a very simple idea. Right? Let's look at revenue receipt. And there are two students who are saying, sir, why are you not adding tax receipts and non-tax receipts when you collect receipts, when you talk about total receipts? My dear, when I count total revenue receipts, is it not the sum total of tax and non-tax? Make observations, no? Please make observations. Right? So when I say total of revenue receipts, is it not the sum total of taxes as well as non-taxes? Right? So please understand. Now, please tell me revenue receipts. Please look at any components in the revenue receipts. Is it going to create a liability for government? Right? Liability means any of these revenue receipts, are you going to repay it in the future? I hope you understand liability. If I give you a loan of 100 rupee today, you will give it back to me after 1 year. So can I say there is a liability of 100 rupee on you? There is a liability of debt on you. So please tell me anything under 1, anything under component 1, is there a borrowing? Is it going to create a liability? Ore Baba, very interesting answers by the way. Very interesting. Some of you are saying, sir, direct taxes are paid by the government back. Who said? Where has Government of India given back taxes to you? Please tell me. I will also file same taxes to government of India. I also want to save money. Nobody will give you that amount of taxes, don't worry. Some of you are saying dividend. My dear, you will earn a dividend. Is it going to create a liability for you? Let me know. You are going to earn a dividend. Dividend means what? Again, please revise. We have discussed it already. Part of the profits, part of the profits earned by companies will be given to the owner of the company. Owner of the company. Now, this is called as a dividend. This is called as a dividend. Now, please tell me, if you earn a dividend, is it a liability for you? Let me go point by point. Is it a liability for you? Right? No, absolutely no. This is not a liability. This is not a liability. Okay, so dividends are not liabilities. And there are certain students who argue this. Sir, what about tax returns? My dear, if you get a refund of tax, does it mean government is returning your income taxes to you? These kind of questions are asked by the students who do not file income taxes. Imagine you get income tax refund. Does it mean government is giving back your income taxes? Who said that? If anybody says that the refunds that you get is your taxes, then my dear, you're wrong. What is the reason why they will give you refunds in taxes? Because please understand, imagine you might have paid certain contribution to PPF. Now you will start running behind PPF without realizing it is not needed for UPSC. Imagine you have paid certain amount under section 80C and you already have paid taxes to government. Government says, Baba, you have paid extra, take it back. Right? So you have paid extra money, please take it back. That is the idea of a tax refunds. Do not complicate it. Don't try to become over intelligent here. Right? Don't try to become more intelligent. Stop it. Okay, so revenue receipts are simple one-sided transactions. Simple one-sided transactions. Government will collect it. That's it. Okay, so come to the capital receipts. Recovery of loan. Imagine government of India has given a loan to a state government and government will collect it back this year. Very simple. Imagine in 2020, central government has given a loan to the state government and this year central government has collected the money back. So please tell me, is it going to create a liability for the government of India? Let me know. Is it going to create a liability for government of India? Some of you say yes. All the best then. No, it is not going to create liability. Arey Baba, can't you understand the term liability? Liability means you will have to repay the money. Some of you do not even understand what is liability. Center will give 100 rupee to the state back in 2020. And state government will return this 100 rupee to the central government in 2023. So where is the liability on the central government? You tell me. Where is the liability on the central government? You please enlighten me. Early morning, please enlighten me. There is no liability created, right? So please think very carefully. Disinvestment. Government of India will sell Air India and collect money. Where is the liability here? Again on government of India. Think on government of India. Central government will sell Air India and collect money. Any liability on the government of India now? Absolutely no liability. They will sell, they will get the money. That's it. So will disinvestment create any liability for the government? No. Come to the last one. Come to the last one. Government of India will issue a government security and borrow from the market. Government will go to World Bank, borrow from World Bank. Right? Now tell me, right, have a look at this. Right? Will it create a liability for the government? Will it create a liability for the government or not? Liability means you are collecting money and in the future you will have to repay the money. So now can I simply say out of all these receipts, right, government is going to have a liability only under the fourth one. Any problem here? And there is one student who basically commented, by giving these examples, you are confusing the student. My dear, as far as I can see, only you are confused. Tell me what is your confusion. I do not want to take the name. If you are confused, tell me what is your confusion so that I can address it. Because based on the comments of the students, they are not confused. If you are confused, let me know. So argument is very simple. Argument is very simple. You will collect money. Is it going to create a liability? Liability again means you will collect money today. Are you going to repay this amount in the future? There is a must payment in the future. That is called as a liability or a debt. Borrowings create a debt, whereas any other receipts do not create a liability for the government. Sir, what is a disinvestment? Disinvestment means government will sell certain assets in the market. Very simple. Government will sell the assets in the market and collect money. Now, government can sell half of the asset. All of you will agree? When I say this, please understand this. Can I say government will sell half of the asset? Half means what? Government will sell 50% of the asset for 50% of company. Government will sell 20% of the company. Government will sell 10% of the company. But essentially what government of India is doing, it is selling certain asset in the market and collecting money. So when you sell the asset, there is no liability created. That is the reason this is called as disinvestment. So what is the recovery of loans? I'll explain it again. In the past, right, let's say in the past, government of India has given loan to a state government. Now this year, government will recover. Recover means collect the loan back. So when you collect the loan back, it is not going to create any liability. It is a recollection of money. That's it. There is no liability created here. Now there is one more term, grant. There is one more term, grant. Now please understand this. What is the concept of a grant? Loan means a debt is created which has to be repaid. All of you will agree? Loan means you will collect the money today, you will repay it in the future. Whereas a grant simply means the money which is paid but not collected. Simple. The money which is paid but not collected. Right? Simple one-sided transfer. That's it. For example, if World Bank will give a loan of 100 crore rupee to government of India, it has to be repaid. All of you will agree? When it will be repaid, that will come future. It has to be repaid. But if the World Bank will give a grant of, let's say, 100 crore rupees to government of India does not pay it back. It will never give it back. That is basically the idea of revenue receipts and capital receipts. Now, please have a look at it carefully. Debt creating receipts. Can I say debt creating receipt is only 4 here? Let me know. Only 4 here. Debt creating receipt is only 4. And non-debt creating receipts are 1 plus 2 plus 3. Non-debt creating receipts are 1 plus 2 plus 3. And within non-debt creating receipts, can I further divide this as non-debt creating revenue receipts, non-debt creating revenue receipts, and non-debt creating capital receipts. Non-debt creating capital receipts. Now, please have a look at the picture. I'll show you the picture. Please tell me, out of all of them, how many or which are non-debt creating capital receipts? Please look at the picture and tell me, out of all the 4, right, which are non-debt creating capital receipts? Listen to me carefully. Some of you are not listening. Non-debt creating capital receipts. Arey Baba, how can 4 be non-debt creating receipt? Just now we have covered it, but even then you will keep on throwing it. Tell me, how can number 4 be a non-debt creating receipt? Did we not discuss this 5 minutes ago or 2 minutes ago? but you are not able to listen to me, right? So listen carefully. Non-debt creating capital receipts. Can I say number 2 and number 3? Anybody has a problem? Non-debt creating capital receipts, number 2 and number 3. Right? Number 2 and number 3. I'm saying number 2 and number 3 include a number 2. Right? And on the other side, non-debt creating revenue receipts. Can I say number 1? Anybody has difficulty now? Can we go forward? And those who are asking, sir, right, what is a non-tax receipt? My dear, examples are there right in front of you. Sir, what is a tax receipt? Examples are there right in front of you. And two students are asking, right, what is borrowing? Right, I do not understand what to say now. Two of the students are asking, what is borrowing? Hey, Baba, what is borrowing? Borrowing means you will take money today with the promise of repayment in the future. That is basically borrowing. In this investment, assets is reducing, so it could be liability for government. How? If your assets will reduce, how it is a liability? Please tell me. How it is a liability? Right? I do not understand. How are you thinking of it? It's not a liability. Assets are reducing. That's it. Okay. Who all give grants to government of India? My dear, World Bank gives grants. Many of these development finance institutes provide grants to the governments. Right? Many institutes provide grants. Okay. Now, let me go forward. Government expenditure. Again, we'll divide government expenditure into two components. We'll divide government expenditures into two components. Have a look at this. Revenue expenditure and capital expenditure. Revenue expenditures, right, basically are those expenditures which are incurred during the day-to-day activities of the government. During the day-to-day activities of the government. For example, I'll show it, don't worry. Expenditures that do not result in the creation of assets are considered as revenue expenditures. Right? For example, have a look at this picture now. Right? Expenditure incurred in order to maintain law and order, defense expenditure, interest payment, subsidies which are paid by the government to farmers, subsidies paid to elderly people, subsidies paid for LPG cylinders, welfare payments, pension payments, grants for creation of capital asset. Now let me be focused on the last component here. Slightly tricky, please understand this carefully. Let me be focused on the last component, grants for creation of capital asset. Now what do you mean by grants for creation of capital asset? Please understand this. Central government will provide the money, that is a grant, to the state government. State government will use this to construct infrastructure. Listen very carefully. Central government has given money, that is a grant, to the state government. State government will construct infrastructure. So question number 1. This infrastructure, is it going to increase the assets of government of India? Question number 1. This infrastructure in this example, is it going to increase assets of government of India? How many of you are saying yes? Please tell me how. Because the answer is no. Answer is no. Why? Who is going to construct? Who is going to construct this infrastructure? Is it the central government or is it the state government? If the state government will construct the infrastructure, arey baba, listen, no, please listen. Central government will give grant, not loan. Give a grant to the state government. State government will use the money to construct infrastructure. So, is it going to increase the assets of government of India? I don't give these kind of arguments. States are part of the union government, right? States are part of India. These are all hollow arguments. Please do not give these arguments. Then if you write UPSC, will you become State Public Service Commission chairman? Can you become an employee of a state government under SPSC? What is the argument? Just for sake of arguing, please don't do these arguments. Right? If you write UPSC exam, does it mean you have passed State Public Service Commission? How? Right? Can you not give argument? Because states are part of the union. Once I passed union, it means I've become a SPSC officer. Why? Right? Please don't make these kind of arguments in interview. Right? You're showing your immaturity. Please don't do that. So states budget is different. Central government is budget is different. So if the central government will give a grant, states will develop the asset. How can you say central government's assets are increasing? You cannot say that. So that is the reason. Please look at the last component here. At least now this argument is okay with all of you. Why do we say, right, the grants for creation of capital asset, grants for creation of capital assets, why do we say these are kept under the revenue expenditure? All of you will be okay with me? Can I go forward now? So please tell me, under revenue expenditure, any of the components, right? Are they going to change assets or liabilities of government of India? Are they going to change assets or liabilities of government of India? My question is government of India. No. Right? So these are some of the components under revenue expenditure. Before going forward, before I go forward to capital expenditure, please understand this. There are certain terms that I've written here. For example, defense. If you ask me, sir, strictly the defense, strictly whatever expenditure incurred on defense, will it always come under the revenue expenditure? Answer is no. For example, salaries that are paid by the government to, let's say, defense personnel, we will keep it under the revenue. Whereas certain assets created under the defense sector, we will keep it under the capital expenditure. We will keep it under, right, a development of infrastructure. Okay, so first one is a revenue expenditure. Now, please look at capital expenditure. Have a look at capital expenditure. Expenditure which is incurred for creating asset with a long shelf life, long time period, it is called as capital expenditure. For example, if government will spend money on construction of roads, construction of airports, ports, right, etc., all of them will be kept under the concept of capital expenditure itself. Let me show it to you. Capital expenditure will consist of expenditure on infrastructure, right? Capital expenditure, right? Capital, just just a second. Repayment of loans, okay? Repayment of loans, and loans that the central government will provide to the states or union territories. Okay, so all these are part of the capital expenditure. So any doubts here? Please do let me know. Any doubts? Will the grants paid by the government of India, the states, for the construction of roads be part of capital receipts of the state's budget? Generally, no, these will be counted as a part. Okay, you're talking about state's budget. If they accept it in the form of grant, they will put it under the revenue side. Okay. Why interest payment is separate from borrowing? Please understand, interest payment is done on right regular basis. Loan component is counted different, interest payment component is counted differently. That's the reason. For example, if you purchase a government bond, after the maturity period, government will pay you back the principal amount. But every 6 months, once every 6 months, government will keep on paying you interest, coupon amount. So interest is always separately counted. Liabilities, the principal amount is counted separately. Okay, your liability is a principal amount here. Okay, any problem here? Any problem? Point 3 of capital expenditure. Loans which are given by the central government to the state government and union territories. What is the difficulty in this? Loans are given, that is counted as a part of capital expenditure. Any difficulty in this? What is pension? Are Baba. That you will have to learn. What is pension means what? You have provided services, pension will be provided to you. Okay, done. Now, some of the times I'm just concerned about some of the students. You do not know even the basic terms, not economics, basic terms. If you ask me, sir, what is borrowing? Tell me, should you not know what is borrowing by now? right? Whatever you're studying, wherever, right, graduate, undergraduate, whatever it is. If you ask me, sir, what is borrowing, that is difficult now, right? If you ask me, sir, what is pension? Pension is nothing but, have you heard of many schemes by government of India, even the state governments, where they'll provide pension for people? Yes or no? Have you heard of those kind of schemes or not? Okay, done. Let me go to the next one. Let me go to the next one. Sir, UTs are part of central government. My dear, UT can be part of central government, but what is written here? What is written? Loans are given by the center to the government of union territory. For example, if the central government will provide a loan to Delhi government, is it not a loan? Is it not going to create asset for government? That's the reason it is written. Okay. Now let me go forward. Let me go forward. Let's start. Very important, deficits. Very important, deficits. Now understand these concepts very carefully. Now, deficits. I've written 6 types of deficits, but in case of India right now, we follow only first 4. I'll repeat the statement. Okay. I've written 6 types of deficits, but only the first 4 are followed in India. The last 2 have been discontinued. Let me prove it. Have a look at this particular picture. Do not buy heart. Please do not buy heart. Have a look at this particular picture. Tell me, first 4 types of deficits are mentioned in the picture. Anybody says, sir, fifth is also there. Sir, sixth is also given here. No, we have discontinued 5 and 6. 1, 2, 3, 4 are only published now. Right? That is, let me start discussing now. First one is revenue deficit. What is a revenue deficit? The difference between, revenue deficit is nothing but the difference between the total revenue expenditure and the revenue receipts. If you remember the earlier picture, the picture was like this. Budget is divided into 2 components, the revenue side of the budget and capital side of the budget. And the revenue side is further divided into 2 components, revenue expenditure, revenue receipts. Capital is divided into 2 components, capital expenditure, capital receipt. Now, what is the revenue deficit? Revenue deficit is revenue expenditure minus revenue receipt. Whenever revenue expenditure is greater than the receipt, it is called as a revenue deficit. Point number 2. Whenever you talk about these kind of deficits, they can be given in terms of rupees or they can be given in terms of GDP. Point number 2, I'll repeat it. Whenever you talk about these deficits, they can be given in terms of absolute number. Absolute number means, right? For example, I'll give a very simple example. Imagine your revenue expenditure is 250 crore rupees and your revenue receipt is 170 crore rupees. Now, can I say revenue deficit is 80 crore rupees? Anybody has a difficulty here? Revenue deficit is 80 crore rupees. Point number 1. And can I mention the same revenue deficit in percentage as a part of GDP, percentage of GDP? Of course, yes. Imagine your revenue deficit is 80 crore. Your GDP number, is let's say 480 crore rupees. Can I solve it? 6. Can I say revenue deficit is 16.66 percentage of GDP? Anybody has a difficulty? Can I also say revenue deficit is 16.66 percentage of GDP? So please understand, generally these are mentioned in percentages of GDP because it is easier to, right, give those numbers rather than saying 15 lakh 9,347 crore rupees like this. That is the basic idea of a revenue deficit. Now let me go to third point. Please understand and tell me now, under revenue head of the budget, is the central government going to create any kind of assets? Let me know. Under the revenue head, is the central government going to create any kind of asset? That is, are the assets of government of India going to change? Are they going to increase? Absolutely no. Which means, please understand, You are borrowing 80 crore rupees. Deficit is nothing but you're forced to borrow. So whenever you have a deficit, it means you are borrowing 80 crore rupees. Is any of these 80 crore rupees used for creation of asset? Absolutely no. So should you keep on borrowing only for expenditure purposes now? Should you keep on borrowing for expenditure purposes? Economics theory says, please do not do that. Please do not do that. Right? When there is a deficit, you will borrow money. But are you borrowing the money for creation of an asset? No, you are not creating asset. Century is not creating asset under revenue head, which means you're borrowing money not for creation of assets, only for expenditure purposes. Should you keep on continuing to do that? Answer is no. Hence, can I say, if government of India will target a revenue deficit is equal to 0% of GDP, this is a good measure by government of India. Let me know. If government of India says, I want to reduce the revenue deficit to 0%, that is good for me. Anybody has a problem regarding this statement? This is the fourth point. Anybody has a problem regarding this statement, please do let me know. Otherwise, I'll go forward. That is the reason if you are reading newspapers, generally government of India says, I want to reduce revenue deficit. I want to bring it to 0%. Why? It simply means even if I borrow any amount of money, understand this. Imagine revenue deficit is equal to 0%. Right? Listen to me very carefully. If revenue deficit is equal to 0% and government will borrow 1 lakh crore rupees, please tell me what is the reason government of India is borrowing? What do you think is the reason government of India is borrowing? Is government borrowing 1 lakh crore rupee to take care of revenue deficit? No. Does it not mean government is using this 1 lakh crore rupee for capital expenditure? Correct? Government is using this 1 lakh crore rupee for capital expenditure. What is there in capital expenditure? Mainly infrastructure. That is the argument. That is the argument. So government of India says, I want to reduce the revenue deficit to zero, but right, I will keep on borrowing. That is for asset creation purposes. That is under the capital side. Can we go to the second one now? Effective revenue deficit. Let me know. Can we go to the second one? Effective revenue deficit. Anybody has a difficulty in RD? Let me know. All these are very important. These concepts are important now. Okay. Second one. Explain once again. Arey, my dear, if your expenditure is 250 crore and your income under revenue head is 170 crore, you are borrowing this 80 crore rupee. Correct or not? Those who are asking, not those who are saying not understood, I'm expecting answer from you. If you are spending 250, you are collecting only 170. From where will you get this extra 80 crore rupees? From where? You will borrow from the market. Now, under revenue expenditure, please tell me, is the central government creating any asset? That is the reason I started with revenue receipt, capital receipts, etc. Under revenue expenditure, are you creating any asset? No. Which means you are borrowing money, but you are not using this money for creation of asset. You are not using any of this for creation of asset. Please do not do that. That is the reason government says, I want to reduce the revenue deficit is equal to 0% of GDP, which means I want to ensure whatever is my expenditure under the revenue head will be equal to my income collection under the revenue head. Right? Which also means if you borrow 1 lakh crore rupee and your RD is equal to 0%, it means you are not using this 1 lakh crore rupee under the revenue head, you are using this under the capital head. Under capital head, you will use money for creation of assets. That is good for you. Let me go to the second one. If you look at revenue expenditure, there is one concern. What is the concern? Please have a look at it again. If you look at the revenue expenditure, there is one concern. No doubt, under the revenue head, government will not increase its assets, but there is also a point of grants for creation of capital asset. which will ultimately lead to creation of asset. I will repeat the statement. Listen very carefully. Under revenue expenditure, no doubt central government's assets will not increase, but the GCCA component at the last, that is ultimately, will lead to creation of an asset. That is the reason some of the experts argued that whenever you want to find out a revenue deficit, your argument is under revenue expenditure, no asset creation will be done. But there is a GCCA which will lead to creation of an asset, but not of central government, but somewhere in the economy. That is the reason we have one more component, one more type of calculation called as effective revenue deficit. Effective revenue deficit is nothing but revenue deficit minus grant for creation of capital asset. That is, I can write it in this way also. Revenue deficit is nothing but revenue expenditure minus revenue receipt, and I will write minus GCCA. This is nothing but effective revenue deficit. Can I restructure this formula? That is revenue expenditure minus GCCA minus revenue receipt. This is basically the idea of an effective revenue deficit. Now let's say hypothetically, I'll just throw the same numbers. Imagine revenue expenditure is 250 crore rupee. The revenue receipt is 170 crore rupee. Revenue deficit is 80 crore. But out of revenue expenditure of 250 crore, what if 20 crore rupee was given as a grant for creation of an asset? It was basically a grant for creation of an asset. Now can I simply say the number, that is effective revenue deficit, will be 60 crore rupee. What is the meaning of it? Now please tell me, out of this 60 crore rupees, can I say out of this 60 crore that you have used, borrowing money that you have used, none of it is used for creation of asset? Let me know. Compared to 80 crore rupees, understand the difference here. Sir, why do we calculate effective? Why not we stop at revenue deficit? Why do we calculate effective here? Can I say out of 80 crore rupees borrowings that you have done, some of it was used for creation of an asset, not by the central government. Not by the central government, but some of it was used for creation of an asset. But look at 60 crore rupees. Now can I simply say in 60 crore rupees, none of it was used for creation of an asset. Everything was consumption expenditure. I hope you understand the difference now. Now please tell me, based on this, between RD and ERD, don't you think ERD is a much better indicator? I hope you understand. Between RD and ERD, don't you think ERD is a much better indicator? Right? That is the second one. Let me go to the third one, fiscal deficit. Let me go to the third one, fiscal deficit. What is a fiscal deficit? Fiscal deficit represents borrowings done by the government. Very simple. What is fiscal deficit? A fiscal deficit represents borrowings done by government. How do I prove it? Let me show it to you. Total expenditure. What is the total expenditure by the government of India? Capital expenditure and revenue expenditure. Correct? Total expenditure is nothing but sum total of capital expenditure and revenue expenditure. But on the other side, please look at the non-debt creating receipts. Look at the second component here, non-debt creating receipts. Now, if you are going to incur expenditure of 100 crore, simple, if you are going to incur expenditure of 100 crore and your non-debt creating receipts are sum of 1 plus 2 plus 3, please tell me what else is left out. What else is left out? Basically the fourth component, the number 4. Do you remember? Number 4, the borrowing component. That is, if I want to write in numbers, let me write numbers. Let me write in terms of numbers. Your total expenditure is 100 crore. Now, you will collect non-debt creating receipts worth 80 crore rupees. Can I say the difference is nothing but 20 crore rupees? So how can you spend 100 crore rupees with 80 crore rupees? It's not possible. All of you, I hope you understand this. How can you spend 100 with 80 crore. It's not possible. So what you will do? You will borrow this 20 crore rupee from the market. So can I say this 20 crore rupee that you have borrowed from the market is nothing but it's fiscal deficit. Can we go forward now? Right? It's nothing but it's a fiscal deficit itself. So the difference between total expenditure minus non-debt creating receipts will give you fiscal deficit. But the difference between total expenditure and non-debt creating receipts is nothing but market borrowings. Hence, we'll simply say the borrowings done by the government this year will represent a fiscal deficit of this year. Can we go to formula number 4 now? Can we go to formula number 4? That is primary deficit. Formula number 4 is primary deficit. Slightly tricky. Please understand this carefully. Slightly tricky. What is the formula for primary deficit? It is fiscal deficit minus interest payment. Fiscal deficit minus interest payment. Now listen to this carefully. Slightly tricky. Listen. This year, I repeat, this year, that is for the financial year 23 and 24. Imagine, Government of India will spend 100 crore rupee on subsidies. 100 crore rupee on subsidies. Government will spend 200 crore rupees on construction of road. And third, government will spend, let's say, 50 crore rupees to pay interest. To pay interest. Point number 1. Point number 2. Now, why do you think government is paying interest? Can I say government is paying interest in this year because government has borrowed in the past? All of you agree? Point number 2, please do let me know if you understand these concepts, right? It is just a game for you. Government is paying an interest of 50 crore rupee in this financial year because let's say hypothetically, government took a loan back in the year 2020. Government has taken a loan. Government has borrowed in 2020. But on the other side, can I say expenditure 1, expenditure 2? I repeat, on the other side, expenditure 1, expenditure 2, both of them are related to activities of the government in the current financial year. I'll repeat the statement. Think of it and do let me know. On the other side, expenditure 1 and 2, that is the money that has been spent by the government of India, both are related to the activities done by the government in the current financial year. Now, can I go forward and use two statements? The first two are related to activities of the government in the current financial year, and third one is related to activities done by the government in the past. Anybody has a problem, please do let me know because I'll go to the next point now. I'll go to the next point. Now, next, imagine this year. Imagine this year, government will basically have a fiscal deficit of 500 crore rupees. Imagine this year, government will have a fiscal deficit of 500 crore rupees. Now, what do you mean by fiscal deficit of 500 crore rupee? It simply means government is borrowing. All of you will agree? The government of India, I said, has a fiscal deficit of 500 crore rupee, which means government is borrowing 500 crore in this year. Now, please tell me, don't you think if government borrows this year, it simply means government finances are weaker this year? Let me know. I will repeat the statement. Government is borrowing this year, does it not mean that government finances are weaker? If government finances are very strong, if their right the capacity to earn income is very strong, why will they borrow money then? Why will they borrow money? They will not borrow money. That is the second point. Third very important point, right? The third very important point. Out of this 500 crore rupee, how much money is being spent by the government for current year activities, and how much money is being spent for past year activities. Can I divide it like this? Out of this 500 crore rupees, how much money is being spent? Because obviously you are borrowing money for spending purposes only. Anybody has a problem with this? Will you borrow money to keep in your pocket? Of course, no. You will borrow money for spending purposes only. So out of this 500 crore rupee, right? Let's say I'll add one more, because some of you will say, sir, 300 only is there, right? Let's say I'll add one more, right? Let's say you will construct airport for another 600 crores. You will construct airport for another 600 crore rupee. So have a look at this. Out of this borrowings of 500 crore, can I say you're using 50 crore rupee for past activities and remaining 450 crore rupee for current activities? For current activities, that is to take care of current year expenditure, you're borrowing 450. For the previous year's right liability, right, you have borrowed 50 crore rupee. Now this is the third point. Now what is the importance of all of this information? What is the importance of all of this? Now let's say, understand this carefully. Let's say rather than borrowing 500 crore, nothing else changes. I repeat, nothing else changes. Rather than borrowing 500 crore, what if government will borrow 100 crore rupee this year? I repeat, please understand. Nothing else, nothing is changing. Only borrowing is changing. Out of, right, let's say 500 crore, rather than 500 crore, what if government borrows only 100 crore rupee? Now, can I say, compared to example 1, compared to example 1, in example 2, finances of government of India are much stronger. Think of it. Compared to example 1, in example 2, can I say finances of government of India are much stronger, which means expenditure is not changing, nothing is changing. But now government is able to collect more money. Government is able to collect more money to take care of their current year activities, and that is the reason their borrowings this year has reduced. All of you are okay with all of these arguments here? Please do let me know. All of you are okay with this? So please understand this. Whenever you talk about primary deficit, the formula is very simple. Fiscal deficit minus interest payment. It is a fiscal deficit minus interest payment. Now have a look at this. If the primary deficit will keep on reducing, can I say, look at example 1 and example 2 and now tell me, if the primary deficit for government of India will keep on reducing, can I say it represents the strength of the financial resources of government of India? I'll repeat it again. Look at example 1 and example 2 and look at the formula for primary deficit also. Can I now say if the PD for government of India will keep on reducing, it represents that the strength, that is the finances of government of India are strengthening. Anybody has a problem with this? Anybody has a problem? And the best case scenario, at least for India, best case scenario will be, can I say if PD becomes a zero, primary deficit becomes a zero, what does it mean? Think of it. If PD becomes a zero, what does it mean? It simply means you are borrowing this year only to pay interest. I hope you understand. You are borrowing this year. If PD becomes is equal to zero, right? You're borrowing money. No doubt you're borrowing money this year, but only using it for payment of interest, which means you have been able to generate sufficient amount of money this year to take care of your current year activities. Can I give this statement now? All of you are okay with this? Right? If PD becomes is equal to zero, it simply means two things. One, you're borrowing money only to pay for interest. And the interest component is not this year activity. It is because you have borrowed in the past. And second, the meaning is, if expenditure, nothing else is changing, right? If you look at this example, if nothing else is changing, it simply means your revenue capacity this year, it is sufficient to take care of this year activities. So don't you think that's a very good situation for Indian economy? Now can I say that is the reason government of India will target to reduce the primary deficit? Can we go forward now? Can you please explain example 1 and example 2? I'll repeat it again. I'll repeat it. Listen carefully. And please understand, UPSC will test you on these ideas. UPSC will test you on these ideas. Everybody will buy hard formulas. I know everybody will buy hard formulas. Even books will give you formulas. But what is the importance of the formula? When you have a fiscal deficit, why do you have right primary deficit? That is very important for you. So have a look at this. And there are two students, very interesting argument. Can you give examples? What do you think I've written in the whole slide? Right? Very interesting questions by some of the students. Can you give examples? What do you think I've done in the slide? So point number 1, imagine this year, right? Or point A, imagine this year government will spend a 600 crore rupee on the airport, right? 100 crore rupee on a subsidies, a 200 crore on road construction, which means, right, the 1 plus 2 plus 4 is a total expenditure incurred by the government. Take it, total expenditure incurred by the government. Whereas 50 crore rupee is the interest payment, but the again this is also expenditure. What is the difference? 1, 2 and 4 are all the expenditures which are associated with current year activities. Anybody has a problem with this statement? I'll repeat it. 1, 2 and 4, all of them are associated with current year activities. Whereas, right, the number 3 here, that is the interest payment. You are paying an interest of 50 crore rupee because you have taken a loan. You have borrowed in 2020, hence you are paying interest. Can I say the activity 3, the expenditure 3, it is not associated with whatever government is doing this year. So on one side, government will collect receipts. On the other side, government will incur expenditure. So let's say example 1, 600, 100, 200, 900, 950. Total expenditure is 950. Imagine your receipts are 450 crore rupee. Example 1. Now please tell me, does it not mean you're borrowing 500 crore rupee? Let me know. If your total receipts are 450 crore and your expenditure is 950 crore, does it not mean you're borrowing 500 crore? And in example 2, I'm saying your expenditure remains the same, 950 crore rupee. But your receipts are 850 crore rupees. At least now tell me, does it not represent improved financial power for government? Look at the receipts and tell me now at least. Right? If your primary deficit is coming down with fiscal deficit of 100 crore, does it not mean your income generation capacity has improved? Correct? That is the whole idea. Right? So in first example, fiscal deficit will be 500 crore and primary deficit will be 450 crore. And in the second example, fiscal deficit is 100 crore, primary deficit is 50 crore. So if the primary deficit keeps on decreasing, it represents a higher revenue generation capacity for the government. And that's the reason government will always target reduction in the primary deficit. Now, before I go to the example 5, or let's say the point 5, please tell me between between fiscal deficit and primary deficit, which is a better indicator? Let me see. Between primary deficit and fiscal deficit, which do you think is a better qualitative indicator? Qualitative indicator, which will give you more quality information. Primary deficit? All of you will agree? Arey Baba, two people said fiscal deficit. My dear, it is primary deficit. Because fiscal deficit, if I say fiscal deficit is 500 crore, can you please tell me out of 500 crore, how much you are borrowing to take care of your current year expenditure? How much for the past borrowings? Please tell me. If I tell you the fiscal deficit is 500 crore, can you tell me out of 500 crore, how much for current year expenditure, how much for the past? You cannot tell me that. But on the other side, if I say primary deficit is 100 crore rupees, at least tell me now. If I say primary deficit is 100 crore, does it not mean you're borrowing 100 crore rupee to take care of your current year activities? Okay, so that is a basic idea. Primary deficit is a much better indicator. Let me talk about 5 and 6 now. Let me talk about 5 and 6, the budget deficits and the monetized deficit. The budget deficit as well as monetized deficit. Now, please understand this very carefully. Earlier, I will write it at the top here. Earlier, that is after independence, government used to publish only two types of deficits, that is a revenue deficit and budget deficit. Right? That is revenue deficit and budget deficit. Right? RD was published, budget deficit was published. Today, we do not publish budget deficit. We have discontinued. Now, question is, what is right a budget deficit? Budget deficit basically represents how much is borrowings done by the government. How much? I'm sorry. Budget deficit basically represents the difference between total expenditure and total receipts. Budget deficit basically represents the difference between total expenditure and total receipts. Now, let me write one more formula. Fiscal deficit represents a total expenditure minus non-debt creating receipts. Please tell me, look at both of the formulas. Do you think the formula for both of them is one and the same? Is there anyone in the classroom who says, sir, both FD and BD, budget deficit and fiscal deficit, both are one and the same? Great. There are two people who are saying yes. My dear, total receipts, which means you're not listening, which shows that you're not listening. My dear, please tell me, total receipts, what are the components of total receipts? Do you remember the picture? Total receipts is basically 1 plus 2 plus 3 plus 4. Correct or not? If you remember the picture, what are total receipts for you? 1 plus 2 plus 3 plus 4. Correct or not? Whereas a non-debt creating receipts is basically 1 plus 2 plus 3. Both are different. Don't say both are not, don't say both are one and the same. Both are different. So earlier what we used to do is, we used to make a comparison between total expenditure and total receipts, which is inclusive of borrowings, which is inclusive of borrowing done by the government. And imagine your expenditure is 100 crore rupee and your receipt is, right, let's say 90 crore rupee. What would be the budget deficit here? Tell me now. What would be the budget deficit? Budget deficit would be 10 crore rupee. So now the question is, how can you spend 100 crore rupee with only 90 crore rupee? How is that possible? That's not possible. So what government used to do? This is budget deficit. What government used to do? They used to go to Reserve Bank of India. They used to go to Reserve Bank of India and borrow 10 crore rupees. Borrow 10 crore rupees from Reserve Bank of India. Is it okay? I'll repeat it again. Earlier, this is important. Earlier, government used to publish revenue deficit as well as a budget deficit. So what is budget deficit? It is the difference between the total expenditure and total receipts. Total receipts are basically 1, 2, 3 and 4. Right? That is a recovery of loans. Right? The revenue receipts, that is tax receipts as well as non-tax receipts. Right? They used to borrow from the market. All of this. Right? 1 plus 2 plus 3 plus 4. Even after that, there used to be a gap between the expenditure as well as right the total receipt. This is called as a budget deficit. Now, government would simply go to RBI, borrow from RBI, so that this extra expenditure for this extra 10 crore rupees, they will have money from Reserve Bank of India. They will borrow from RBI, spend money in the market. This is called as a budget deficit. And please tell me, did we discuss this? RBI providing loans to Government of India, right? Can we discuss this? I'm sorry, did we discuss this? This is nothing but direct monetization. Do you remember it? This is nothing but direct monetization. Hence, this was called as monetized deficit. Hence, this was called as monetized deficit. So, government would directly borrow from RBI. Government would directly borrow from RBI. Listen, I'm saying it very carefully. Some of you are not listening. Hence, government would directly borrow from RBI. That was called as monetized deficit. Now, please tell me, we have discussed this. Is monetized deficit good for Indian economy? Think of it. Is monetization of deficit, the direct monetization, is it good for Indian economy? Answer is no. Why? That will lead to a lot of inflation in the economy. So we have discontinued the concept of monetization of the deficit. Now, if you have discontinued the concept of monetization of deficit, can you keep on calculating budget deficit? Is there any use of it? Point number one. Right? If you have discontinued monetized deficit, monetization of the deficit is discontinued. Direct monetization, we don't do it. Then is there any point of calculating budget deficit? No, there is no point. And point number two, component 4. Think of this very carefully. Component 4, is it purely an income for government of India this year? Think of it. The component 4, what is component 4? Borrowings. Right? Can you say borrowings are purely incomes for the government of India? If you ask me, sir, what do you mean by pure income? I'll give a very simple example. Government of India will give you a driving license. Okay, Government of India will give you a driving license. And when you want to get a driving license, will you pay certain charges to Government of India? Yes or no? Will you pay certain charges to government or not? Anybody here who says, no, sir, I got it free of a cost? No, you will pay certain charges. Government of India will issue a passport to you. Government will issue a passport to you. And when you want to get a passport, right, you will have to pay certain charges. You'll have to pay certain charges. Second example. Third example, government will issue government bond in the market, collect 100 rupees today now. Now, please tell me, between 1, 2, and 3, which of the 3 can you say these are pure incomes for the government? Pure incomes means where repayment is not there. Where there is no repayment, can I say 1 and 2 are pure incomes? Whereas number 3, it is an income today, but in the future you will have to pay it back. So that was the argument. Some of you are saying only 1 is a pure income, only 2 is a pure income. My dear, 1 and 2 are both incomes for the government of India. Government will collect lot of fees, lot of fines in the process of providing services. So can I say 3 is an income today, but in the future it becomes a liability. Hence, that was the reason borrowings which were considered as a part of total receipts earlier were separated now, were calculated separately, and that's the reason we are calculating fiscal deficit now. Does it make sense to you? That's the reason we have discontinued budget deficit and we have introduced a much better indicator compared to fiscal deficit. I'm sorry, compared to budget deficit, which is called as a fiscal deficit. Any problem with this? Can I go forward now? Can I go forward? Any problem with what I'm explaining? Please do let me know. So budget deficit, monetization of deficit earlier was there. Today we do not follow them. We do not follow. We have discontinued monetization of the deficit. Right? And because earlier in total receipts, even borrowings were counted, argument was the borrowings are not pure incomes for the government because they are going to create liabilities. That's the reason we have discontinued budget deficit. We have introduced fiscal deficit. Anybody has a doubt? How it become monetization? RBI will print money and give money to bank. Then it is a direct money. Are Baba, please revise. No, please revise. You people are not revising. There's no point in running around the same thing again and again. Did we discuss? Right? Let me know. Did we discuss earlier in chapter of RBI? Did you discuss a direct monetization and indirect monetization? If you're not revising it, is it not your fault? Revise then. Direct monetization means government of India will sell bonds to RBI. That is a direct monetization. Indirect monetization means RBI will take the bonds, not purchase, take and sell it to investor, give money to government of India. That is indirect monetization. So direct monetization we do not follow. Only in extreme cases will follow. Right? Right now we are only allowed to do indirect monetization. Okay, done. So these are the different types of deficits in the budget. All of them are equally important. If you ask me, all of them are equally important. Do not miss out and understand the concept behind them. Understand the concept behind them. Now tell me, if government of India will put a target like this, right? If government of India will put a target like this, right? Don't you think this is a nice target to achieve for the government of India? In fact, they have this target now. If government of India says, I want to have RD is equal to 0% and FD is equal to 3%, don't you think it simply means government is telling you, I will borrow money. FD means borrowings. I will borrow money, right? But I will use this money only for capital expenditure. None of it I will use it for revenue expenditure. Okay. So that is basically the idea now. Let me go to the next one. Let me go to the next one. Please have a look at the picture now. Please have a look at the picture. My recommendation, next year, when the budget documents are published, please buy hard them. Please buy hard them. Why? Please look at the rupee, right? Where the rupee is coming from, coming for government of India, which means where does government earn the income? Just make observations here. Just make observation. Can I say, can I say, out of the total income collected by the government, out of total income collected by the government, most of it is collected in the form of taxes? Let me know. Can I say, out of the total income collected by the government, most of the income is collected in the form of taxes? Those who are saying no, now I'll start literally taking their names, because you people are not even looking. Please look, right? How difficult is it? Please look. Out of the total income collected by the government, I'm saying most of the income is coming from taxes. Very simple question, by the way. I don't know how difficult is it to look at the numbers. I don't know. I don't want to take the names and start shaming them, but please observe, no? How difficult is it? Corporate taxes, income taxes, customs duties, excise duties, right? A GST. Your argument is, sir, no, most of the income is not coming from taxes. Then open the calculator, start calculating. So borrowings are 34%, non-debt capital receipts are 2%, non-tax revenue are 6%. So 34 plus 2, 36, 36 plus 6, 42. 42% are these, which means remaining 58%. I repeat, remaining 58% are coming from the sources of taxes. Correct or wrong? You can do the calculation. Right, sir? Early morning, my CSAT is very weak. Right? Open your mobile. There is an app by the name of calculator. Use it. You will get the number. So 58% is coming in the form of taxes. That's the reason government is so much worried about taxation. But on the other hand, have a look at this. Where does government spend the money? Where does government spend the money? Government will spend on schemes. More than one-fourth of the money government will spend on schemes. Now, there are two types of schemes here: centrally sponsored, central sector. What do you mean by this? In case of centrally sponsored, let me start with central sector. In case of central sector, 100% of the expenditure, 100% of the allocation is done by the government. 100 percentage of the money allocated for a scheme, it is done by the government. Centrally sponsored scheme. Centrally sponsored scheme means, right, in case of centrally sponsored scheme, government will allocate 50% of the funds. Government will allocate 60%. When I say government, central government. Government will allocate 75% of the funds, or government will allocate 90% of the funds, which means a remaining amount of money state governments will spend. You will come across these kind of schemes where part of the money will be incurred by central government and the remaining part incurred by the state government. These are called as sponsored, centrally sponsored schemes. So central sector scheme, centrally sponsored scheme. Interest payment is 20%. Please look at the interest payment component. Please look at the interest payment component. 20% of total expenditure government makes, it is on interest, which means imagine to what extent our borrowings have been done in the past. I hope you understand the repercussions of it. If government of India, let me show it to you. If government of India is totally going to incur an expenditure of 45 lakh crore rupees, 45 lakh crore rupees in 1 year, 20% of it is in the form of interest, which means around 9 lakh crore rupees. Around 9 lakh crore rupees, government is simply paying in the form of interest. Why? Our borrowings have been very, very high, especially in the last couple of years. Defense 8%, subsidy 7%, finance commission, you'll understand after some time, don't worry. Pension 4% and other expenditures 8%. So this is how generally government will spend the money and collect the money. Now next one, just observe the table. Do not by heart anything in the table. I'll repeat. Do not by heart anything in the table. Just observe the table. For the current financial year, 23 and 24, for the current financial year, right, what are the estimates provided by the government? Total expenditure is a 45 lakh crore rupees. If total expenditure is 45 lakh, automatically total receipt also has to be 45 lakh crore rupee. How much is the borrowings planned by government of India? This year, the government of India has planned to borrow 17.8 lakh crore rupee. 17.8 lakh crore rupee. That's not a small amount. Very, very huge amount. Primary deficit is 7 lakh crore rupee. Now, please tell me, can we make certain inference here? Can we make certain inference? What is the inference? If a primary deficit is 7 lakh crore rupee, and it should make perfect sense to you. I hope you understand. It should make perfect sense to you. If fiscal deficit is 17.8 lakh crore, primary deficit is 7.06 lakh crore rupee. What is the difference between both of them? Around 9 to 10 lakh crore rupees. And what was the 9 to 10 lakh crore rupee that we have discussed earlier? Is it not interest payment? Yes or no? Is it not interest payment? And if this 7 lakh crore rupee is the primary deficit, what is the meaning of it? It is that government this year, to conduct its activities for this year activities, they are borrowing 7 lakh crore rupee. And remaining amount of this fiscal deficit, they are using it to pay interest. If you don't trust me, after the class is over, use a calculator. You will get all the numbers perfectly correct. Right, so effective revenue deficit is around 5 lakh crore rupees. Revenue deficit is around 8.6 lakh crore rupee, which also can mean, you can use it like this, right? Out of 8.7 lakh crore, if your ERD is 5 lakh crore rupee, which means GCCA component should be how much? Around 3.7 lakh crore rupees. I hope you understand. Can you use all the formulas now? If your revenue deficit is 8.7 and your ERD is 5 lakh crore rupee, what does it mean? GCCA, grants for creation of capital asset, GCCA should be 3.7 lakh crore rupee, which means the center is giving various other institutes, various other authorities 3.7 lakh crore rupees for creation of an asset. That is the meaning. Okay. So these are certain important components. Please do not by heart any number. Do not by heart any number. UPSC will not ask you these numbers. Don't waste your time. Now, this is the graph. This is a graphical representation of different types of deficits. What has been the trend? Please have a look at it. What has been the trend? Please look at it. Right? Basically, the trend is that Government of India wanted to reduce these deficits, and it should make perfect sense to you. Government of India has a target of reducing all these deficits. They should reduce these deficits. But tell me, what do you think will happen when there is an event such as pandemic? What do you think will happen when there is an event such as pandemic? Do you think government will be able to collect more income? No. But on the other side, expenditure of government will automatically start increasing. As a result of this, what will happen to the fiscal deficit? What will happen to primary deficit? What will happen to revenue deficit? All these deficit will start skyrocketing. And that is the reason it has increased. And now again, Government of India is trying to reduce these deficits. It is trying to target and reduce all of these deficits. Done? Right? So this is the trend of the deficit. UPC has a tendency of asking a question on trends. So for example, sir, what do you mean by question on trend? Earlier, a question on this line was asked. Fiscal deficit in the last decade has consistently increased. Fiscal deficit in the last decade has consistently decreased, right, etc. So these kind of questions are asked by UPSC. Please be very, very careful. Trend based questions are asked. Done? Any doubts so far? Can we go forward now? What is the difference between budget deficit and monetized deficit? My dear, budget deficit represents how much is the excess of your expenditure compared to your income. Monetized deficit represents how much you will borrow from RBI. Right? How much you will borrow directly from RBI. In fiscal deficit, we don't consider borrowing. It will show government spending on day-to-day expenditure and asset creation. In primary deficit, we will subtract interest payment to know current expenditures and why are they different. Both are qualitative, right? I'm not able to get that. My dear, let me give a very simple example. Imagine it says you have borrowed, right? Have a look at this. It says you have borrowed 17.8 lakh crore rupee. Think of it. You have borrowed 17.8 lakh crore rupee. Now, please tell me, out of this 17.8 lakh crore rupee, can you find out if this number is not there? Don't say, sir, it is there in the table. I'll say, if there is no primary deficit, out of 17 lakh crore rupee, can you tell me how much money you have used for payment of interest? Simple question. Can you tell me how much money you have taken, right, from the 17 lakh crore rupee for payment of interest? You cannot tell me. Are some of you are saying yes? Again, you people do not listen. That's the reason all these things will happen. I'm saying, imagine there is no primary deficit. Do you understand English or not? Imagine you do not have any primary deficit calculation. So when there is no primary deficit calculation, your borrowings are 17 lakh crore rupees. Can you find out only on this number how much money you have used for payment of interest? How much money you have used for current year expenditure? You will not be able to find out. Now, if I say out of 17 lakh crore rupee, primary deficit is 7 lakh crore rupee, don't you think you will come to know that, okay, out of 17 lakh, I'm using only 7 lakh crore rupee for current year expenditure, remaining 10 lakh rupees for past payments. Don't you think because of this, PD is a better indicator compared to FD? At least now tell me. Because of this, don't you think PD is a better indicator compared to FD? That is the argument. Okay, come to the next now. Come to the next. What is the debt profile of the government? Debt profile. Now understand certain very important concepts here. Let me introduce certain very, very important concepts here. Point number one. Please tell me what is fiscal deficit? It is over now. Please tell me what is fiscal deficit? Fiscal deficit is how much government of India is borrowing this year. All of you okay with this? How much is government of India borrowing this year? So let's say government will borrow 100 crore rupee in this year, that is financial year 23 and 24. And let's say last year, government borrowed 200 crore rupee by issuing a 10-year government bond. By issuing a 10-year government bond, that is in the financial year 22 and 23. So question number one, can I say fiscal deficit for current financial year is 100 crore and fiscal deficit for last year was a 200 crore? Anybody has difficulty in understanding this? I'll repeat it again. Can I say this year's fiscal deficit is 100 crore and last year fiscal deficit was 200 crore? Question number two. Please tell me what is the total debt of the government in this example? What is the total debt? Total debt of Government of India. Total debt means how much money totally Government of India has to give back. Arey Baba, think very carefully. Some of you are not thinking. That is the problem. How much money does Government of India have to pay back? In this example, can I say 300 crore rupee? That's the reason I wrote a 10-year government security here. Understand the reason why I wrote a 10-year government security is, can I say in 22-23, if I borrow 200 crore rupees, you will have to pay this 200 crore after 10 years? Yes or no? You'll have to pay this 200 crore after 10 years. So your total debt here would be current borrowing, this year borrowing, plus earlier borrowings, which you have not repaid. So total debt will be 300 crore. Now please tell me, all of you will agree with me when I say public debt is a bigger number compared to fiscal deficit, or else fiscal deficit is different, public debt is different. Anybody has a problem with this? And if you are, some of you are asking, sir, what is public debt? Public debt basically represents how much is the amount of repayment, how much is the amount of repayment that Government of India has to pay back, taking the money from Consolidated Fund of India. Very simple. I will repeat the statement here. What do you mean by public debt? Public debt simply represents how much money Government of India has to pay back by taking the money from Consolidated Fund of India. So can I say total amount of money that the Government of India has to pay back in this example is 300 crore rupee. Can we go forward now? So please look at the point number A here. Please look at point number A. Public debt is nothing but internal debt plus external debt. Did we discuss this? Internal plus external, earlier did we discuss this under the concept of banking? So total public debt is internal plus external. Now let me go to the point number B here. Public account liabilities. Public account liability. Now there is also an account by the name of public account, right? Article 266 or 267. Please remember, polity, for whom it is over, by heart them. For whom it is not over, under polity we'll discuss all of this. There are three types of accounts. One is called as a, right, the consolidated fund. Second one is called as a public account, and the third one is called as a contingency fund. And there are two articles which are related to all the three types of funds. 66, that is 266 and 267. What's the basic idea of a public account? Public account, right? Government of India, understand this. Government of India can add money into public account, can withdraw money from public account. It doesn't require any permission of the parliament, right? It doesn't require any permission of the parliament. They don't require any approval of the parliament. But please understand, all these monies which are there in the public account are the liabilities. That is, Government of India is responsible for this amount of money which is there in the public account. For example, right? Right. For example, the idea of pensions, right? PPF accounts, idea of pensions, small savings funds. Have you heard of small savings funds? SSF, small savings funds. All these liabilities are basically for Government of India only. All of these, the liability are Government of India. That is, Government of India will guarantee the payment. These are liabilities of Government of India. If you contribute to PF, if you contribute to PPF, if you contribute to small savings funds, all these Government of India is liable for making a repayment. Now, please understand this, right? I said all of these are components of a public account, and if Government of India will guarantee the payment of all of this, don't you think these will be counted as a part of liabilities for Government of India? Liability means government is guaranteeing the money. Government is guaranteeing the payment. So public account liabilities are also counted as a part of total liabilities of government. Total liabilities of the government. So first one is a public debt. Money is taken from the consolidated fund. Second one is a public account liability. Third one, slightly tricky, extra budgetary resources. What do you mean by extra budgetary resources? Let me explain with an example here. Listen to the example very carefully. Imagine a road has to be constructed. Okay, imagine road has to be constructed. There are two ways for government of India to construct a road. Example 1, the amount of expenditure is, let's say, 1000 crore rupee. Amount of expenditure is 1000 crore rupee. Let's start. Government of India in a budget, example 1, in budget will allocate 1000 crore rupee. Will allocate 1000 crore rupee. So government of India in the budget will allocate 1000 crore rupee. Example 2, this is important. Example 2, government of India will allocate 600 crore rupee. Government will allocate 600 crore rupee for construction of road. But how much money is required? 1000 crore rupees required. So there is an authority by the name of National Highways Authority of India. NHAI, National Highways Authority of India. Government of India will tell NHAI to borrow 400 crore rupees and use the 400 crore rupees to construct this national highway. Now, please understand this carefully. Can I say in example 1, government expenditure is higher compared to example 2? Government of India. Think of it. Please look at the examples and tell me. In example 1, government of India's expenditure is higher compared to example 2. And can I now say, if nothing else changes, in example 2, government of India's borrowings, I repeat, government of India's borrowings would be lesser compared to borrowings under example 1. Does it make sense to you? Is it making any logical sense or not? Please do let me know. If nothing else is changing, nothing else changes, right? Can I say the borrowings of government of India under example 2 will be lesser than borrowings of government of India in example 1? Those who are saying no, tell me why. Tell me why. Imagine, right? Imagine government, because of this 1000 crore rupee, imagine government, right, will borrow, let's say, right, let's say any number, don't worry about it, right? Apart from this requirement, government will borrow 4000 crore rupee. But in the second example, how much government of India spending? Tell me, how much government of India spending? 600 crore. If government of India's expenditure will come down, don't you think the borrowings will also come down? It's a basic idea. It's a basic idea. If government of India's expenditure will come down, don't you think borrowings will come down? So don't you think fiscal deficit would be lower in example 2? Yes, it will be lower. This is right. Understand this. This concept is called as extra budgetary borrowings, extra budgetary resources, and this is called as off budget liability, off budget borrowing or off budget liability. Please understand the logic behind it. In the example 1, government of India will directly borrow lot of money. In example 2, government of India will borrow lesser money, but authority owned by government of India will borrow money. Government of India is not borrowing 400 crore here. Look at example 2. If you do not look at it, that is not my problem. Please look at example 2. Can I say in example 2, government of India is not borrowing 400 crore. Authority or entity owned by government of India is borrowing 400 crore. So please tell me, when government will borrow, right, don't you think this 400 crore will not be counted in government of India's borrowing? Yes or no? When government of India will borrow, this 400 crore is not counted as a part of government of India's borrowing. Right? This 400 crore will be referred to as extra budgetary liability, extra budgetary resources. And second very important point here. Second very important point. If National Highway Authority of India is borrowing 400 crore, do you think government of India will take the permission from the parliament for it? Is it part of the budgetary exercise? Do you think government will ask parliament's permission? No, they will not ask. Why? Right? They are not taking, government of India is not taking a loan here. I hope you understand. Government of India is not taking loan. Some entity owned by government of India is taking loan. So now tell me, through extra budgetary resources, can we say government borrowings can be controlled? This year, talk only about this year. Don't worry about anything else. Through extra budgetary resources or extra budgetary borrowing like this, can I say government of India's borrowings can be controlled? Can we control fiscal deficit of government of India? Yes. But come to the second point now. If National Highway Authority of India is borrowing, let's say for a duration of 5 years, who will pay interest for it? Who will repay the principal for it? It will be paid by government of India. It will be paid by government of India. But look at the advantage of this. Please look at the advantage. Government of India will pay back the principal 400 crore after 5 years. Is it okay? After 5 years, government of India will pay back the principal. But for 5 years, can I say this 400 crore is not counted as part of, right, basically the public debt. All of you agree? For these 5 years, this 400 crore will not be counted as a part of public debt. Why it is not counted part of the public debt? It is because it is not directly the borrowing done by government of India. Government of India is not borrowing the money directly. Entities owned by government of India will borrow from the market, but the payment of the interest plus the principal, it is the duty, it is the liability of government of India. Hence, when I talk about total liabilities, should I be counting extra budgetary borrowings like this? Should I be counting extra budgetary resources? Answer is yes. So total liabilities of government of India will be A plus B plus C. That will be the public debt. Public debt. Second one is a public account liability as well as the extra budgetary resources. Right? Extra budgetary resources. This is how total liabilities are calculated, how public debt is calculated, right? How liabilities are counted. Can we go forward now? Can we go forward? But NHI is under Transport Ministry. Yes. Who said no? Did I say NHI is not part of India? I'm sorry, Government of India. Did I know? Did I say this or not? Food Corporation of India, NHI, everything is owned by government of only. Every one of them are owned by government of India. But argument is not whether these are owned or not. Argument is whether government of India is directly borrowing or they are asking them to borrow in the market. Let me know. Simple question, my dear. If a Food Corporation of India borrows, is it as good as saying government of India is borrowing? Think of it. If Food Corporation of India borrows, if National Highways Authority of India borrows, does it mean government of India is borrowing? Arey Baba, some of you keep on saying yes. RBI will take loan from you. Tell me now. At least now it should be clear. RBI will take loan from you. Sorry, not RBI, SBI. SBI will take a loan from you. Does it mean government of India is taking loan from you? Let me know. Simple question to all of you. SBI is taking a loan, right? Does it mean government of India is taking a loan? Why not? Those who are saying yes, right? Those who are saying earlier yes, why not? Because SBI is owned by whom? Government of India. Tell me now. Please tell me. SBI is owned by government of India. So why not say if SBI will collect your deposit, government of India has collected your deposit? Does it make sense now? Think no. Always think. Think practically always. No, it is not as good as government of India is taking your deposit. So in the same way, National Highways Authority of India is also owned by government of India. NHAI will go to the market, borrow from the market. So it is the borrowings of NHAI, not counted as borrowings of government of India this year. Right? So that is a basic idea. Okay? Done? Can we go forward? But then interest should be paid by NHAI. My dear, who has asked NHAI to borrow from the market? Think of it. Who has asked NHAI or Food Corporation of India to borrow from the market? It is Government of India. So who has to pay the principal? Who has to pay the interest? Government of India. Okay? Again, do not complicate it. Keep it always simple. Do not complicate it. Okay? Now let me go to the next one. FRBM, Fiscal Responsibility and Budget Management Act of 2003. FRBM stands for Fiscal Responsibility and Budget Management Act of 2003. Now, what is this Fiscal Responsibility and Budget Management Act? First one, we need to reduce FD and RD. Right, first and second, we need to reduce FD and RD. We need to target FD to 3% of GDP, and we need to target RD to 0% of GDP. All of you will understand now why it is 3% and 0%. Let me know. All of you are okay why the target is 3% for RD and 0% for FD. I'm sorry, 3% for FD and 0% for RD. I said vice versa. At my mistake, I'll repeat it again. FD 3%, RD 0%. So you are announcing this in 2003, and we wanted to reduce right to these levels by 2008 and 9. So annually, by how much percentage you will have to reduce? Annually, how much percentage you will have to decrease them? Right, the targets were given. So every year, keep on reducing FD by 0.3% and RD by 0.5% so that you will be able to meet the target by 2008 and 9. Did we meet the target? Absolutely no. We have not been able to reduce our RD to 0%. We have not been able to reduce our FD to 3%. Even today, we are trying to move towards that only. Even today, we are struggling to move towards that. Deficits are allowed to exceed targets only under certain circumstances. What circumstances? I will tell you. Have patience. Right? Have patience. I'll tell you. Under what situation you should be allowed to, right, basically exceed the deficit targets. Right? For example, I'll give a one example here itself. Imagine there is a right war between India and another country. Think of it. Imagine India will go to war with another country. Now, please tell me, during that particular phase of war, don't you think expenditures by government will start exceeding the target? Yes or no? Right? All of you are able to understand the argument here? If there is a war, right, automatically the government's expenditure, you cannot control it. You cannot simply say, my budgeted expenditure is this much. So, if you want weapons, no, I will not be giving you weapons because my fiscal deficit will increase. I cannot simply say, right, don't pay more, right, for these because my revenue deficit will increase. No, we can't do that. So there are certain situations, those situations I will give it in a slide. Only in those circumstances, targets can be expanded. Okay. Reserve Bank of India must not subscribe to primary issuance of G security. Can I say point number 4 is nothing but direct monetization? Is it okay? Can I say point number 4 is nothing but direct monetization? Right? RBI should not directly monetize the deficit of Government of India. So these are certain very important provisions of FRBM Act of 2003. Now, apart from this, under the Act of 2003, Government of India will have to publish three very important documents. By heart all the three. Apart from these provisions under FRBM Act, Government of India will have to publish three very important documents. What are these? One is called as a macroeconomic framework statement. Second one is a fiscal policy strategy statement. And the third one is a medium term fiscal policy statement. Right? Three documents Government of India will have to publish. Now, what is this medium term fiscal policy statement? Government, whenever the budget is announced next year, make an observation. Please observe. You will see all of them. Government, whenever they do the budget announcement, they will have to provide a 3-year rolling targets for these parameters. Government will have to provide a 3-year rolling targets for these parameters. That is, for the next 3 years, what will be the target for all these parameters, government of India will have to give you document. Now, why these are called as a rolling target? Please tell me hypothetically. Just understand this carefully. You are the finance minister. 7:55, I'm making you finance minister. Congratulations. So let's say for next financial year, right, 24-25, you want to target fiscal deficit to, let's say, 4.8%. For 26-27, you want to target fiscal deficit of 4.1%. And for 27-28, you want to target a fiscal deficit of, just a second, it should be 25, it should be 25 or 26, and 26 and 27, 3 financial years. So for 26-27, you want to target a 3.6 percentage of a fiscal deficit. Now please tell me, these numbers you have given based on current situation. After 1 year, don't you think situation will be different? Simple question to all of you. These numbers you gave based on your calculations in the current year. So after 1 year, do you think everything will remain same? Of course, no. So don't you think after, let's say, 1 year, you'll have to adjust the target for 25 and 26 and 26 and 27? All of you will agree with me? After 1 year is over, based on the situation, then will you not adjust the target for 25-26 and 26-27? For example, what if there is one more wave of pandemic? Again, just a hypothetical example. What if there is one more wave of a pandemic? Can you have a fiscal deficit of 4.1% target for 25 and 26? Then your targets are not realistic. Why? Please have a look at this graph. What happened because of the pandemic? Have a look at it. Right? Our number was 4.6% for 19 and 20. Thanks to pandemic, right? Your fiscal deficit doubled to 9.2%. Doubled to 9.2%. So I hope you understand. So based on the situation, then government will have to realign, readjust these parameters. Now, can I say this continuous adjustment is nothing but rolling adjustment? Rolling means changing. Rolling is nothing but a concept of changing, right? You're adjusting your targets based on the available data with you. That is the reason these are called as a rolling targets. So for right 3 financial years, next 3 financial year, rolling targets for all these parameters will be published by the government in the budget documents. Next one, macroeconomic framework statement. You will have to basically provide the survey of the economy. I'm sorry, the survey of Indian economy. Survey in the sense, government of India will provide information regarding how industries are performing, how agriculture sector is performing, right? How external market, that is how our exports and imports are doing, right? How the GDP will grow in the next 1 year. What will happen to the GDP in the next 1 year? Assessment is done. Simple assessment, right? Please understand. Is it a guarantee? Please do let me know. If finance minister will tell you in the budget, next financial year, we will achieve a GDP growth rate of, let's say, 5.8%. Is it a guarantee? It's not a guarantee. It is basically an assessment. Based on the current parameters, the finance minister says we might end up achieving 5.8% GDP growth rate in the next 1 year. That is generally done in a macroeconomic framework statement. Assess what is the growth prospect for the economy. Statement contains overview of the economy, includes assessment regarding GDP growth rate, fiscal balance of the central government, external sector balance, etc. etc. So all of this data is given in macroeconomic framework statement. And the third type, fiscal policy strategy statement. So in the next 1 year, you're going to implement the budget, but for the next 1 year, what is your strategy? Right? Which area you will be focusing more? Will you be focusing more on promotion of industries? Will you focus more on promotion of exports from India? Will you focus more on promoting financial inclusion? Will you target agriculture sector? So what are your focus areas? What are your strategy areas in the next 1 year? That information has to be provided by the government under the fiscal policy strategy statement. Okay, so these three documents, right? These three documents are basically provided, right? Every year by the government in the budget. Okay, done, right? So next is the concept of encasing committee, right? That is basically FRBM review committee. FRBM review committee. Okay, so we'll take up FRBM review committee after the break. Now, before I take the break, if there are any concerns, any issues, please raise it so that, right, we can go forward. Can you repeat ERD, effective revenue deficit? Revenue deficit is the difference between the revenue expenditure and a revenue receipt. And this deficit means you're taking money and you are spending because there is an excess expenditure. But argument is part of the expenditure that you have done, it is because of grant for creation of capital asset, which is nothing but going to lead to creation of an asset, but not directly by the government of India. So whatever is the deficit, you want to find out, right, how much money you have borrowed only for consumption purposes, not for asset creation. So what I will do, from revenue deficit, I will subtract grant for creation of capital asset. Okay. If primary deficit is negative, what it means? My dear, that it simply means you have a surplus. You have a surplus, right? Fiscal deficit is not there. You have fiscal surplus. If there is a negative primary deficit, it simply means you have a fiscal surplus, not fiscal deficit. Okay. Meaning of administered pricing. What is the context you're asking that? Please do let me know. So now there is a need to learn budget deficit. Remember the concept. UPSC can ask you that. UPSC can ask you that. Remember the concept. But we do not follow. Right, the budget deficit. So total liabilities of government of India is how much as a percentage of GDP? It is somewhere over 80%. Right, both central government and state government, it is more than 80%. Primary deficit represents how much of your borrowing, I repeat, how much of your borrowing you will use it for current year activities. How much of your borrowing you will use it for current year activities. Okay. Okay, done then. So let's take a break. We'll restart at 8:12. Take a break. Okay, am I audible and visible now? There's some technical issue, so I had to basically reset. Am I audible and visible? Okay, let's start. So next we are supposed to discuss the concept of FRBM review committee. Okay. Right, FRBM review committee. Now this committee was headed, or the chairperson of the committee was Mr. N.K. Singh. And what are the recommendations of this committee? Point number one, they have recommended a draft debt management and fiscal responsibility bill. Draft debt management and fiscal responsibility bill. So they have recommended certain changes in the way we actually. Are Baba, those who are saying voice is not clear, please hit refresh. No. Right? Should we keep on doing this every day? Please do let me know. Should we keep on doing this every day? If the voice is not clear, there's a button which says fix audio. Hit that or hit refresh button. Okay, done. Let's start. They proposed, right? They proposed a new debt management and fiscal responsibility bill. Okay. Now, what are the important changes? What are the important things they have recommended? First one, they have recommended that rather than targeting only the fiscal deficit and revenue deficit, rather than simply targeting fiscal deficit and the revenue deficit, we should also, apart from fiscal deficit and the revenue deficit, we should also target debt. We should also target debt, right? We should also target the debt of the government of India. Okay. Now the audio is clear. Now the audio is okay. Okay, let's start. So apart from right targeting only the fiscal deficit and a revenue deficit, apart from targeting fiscal deficit and a revenue deficit, we should also target the debt of government. Now, please understand, whenever I say debt here, you can basically talk about two types of debt. One is called as a public debt, and second one is overall debt. One is the public debt, and the second one is overall debt. What do you mean by public debt here? The public debt is of central government. Public debt is nothing but the debt of central government. And second, overall means the debt of the central plus states. The debt of the central government plus states. Now, for overall debt, the target that has been recommended by the committee is 60%. That is the central government plus state government. The debt should be 60%. Out of this, 40% limit. 40% limit has been given for the central government, and remaining 20% limit has been given for the states. Please have a look at it. Please look at the table here. Do not by heart anything in the table. Please observe the table. The committee has recommended that by financial year 23, we should be able to bring down, the debt to GDP ratio of the central government to below 40%. The fiscal deficit, we should be reducing it to 2.5%. And the revenue deficit, we should be reducing it to 0.8%. I'll repeat the statement. The debt to GDP ratio should be 38.7%. The fiscal deficit should be 2.5%, and the revenue deficit should be reduced to 0.8% of GDP by financial year 23. These are the recommendations. These are the recommendations of the committee to reduce the RD, FD, as well as the debt of central government as well as state governments. Now, apart from this, the committee also recommended that to achieve the target, annual targets, annual reductions should be given. Right, annual reductions target should be given to the central government, which has been provided under the committee, which has been provided by the committee. By 2023, the target is 38.7%, right, 2.5% as well as 0.8%. Okay. Now, apart from this, there is also recommendation of independent or autonomous fiscal council. Independent or autonomous fiscal council. Now, what is the recommendation here? We should set up a new entity called as a fiscal council, which will consist of experts. The fiscal council will basically consist of experts. Now, what would be the role of the fiscal council? Right? What would be the role of fiscal council? Right, first one, it will prepare multi-year targets for the government. It will recommend changes that should be done by the government in order to achieve these particular targets. It will also recommend how do we improve and collect the data, how fiscal data collection can be improved. It will advise the government if there are any conditions which are existing, so that the government can relax its fiscal deficit target, so that the government can reduce its debt target, etc. It will also advise the government to take various changes in their policies in order to meet these particular targets. So these are certain recommendations which have been provided to set up a fiscal council. But please remember this, we do not have a fiscal council in India. We do not have a fiscal council, right? There is no fiscal council in India. Recommendation is there. We are yet to implement it. Next one, the grounds under which government can deviate from the target. Under what situation the targets can be deviated? That is, let's say you have kept a target of fiscal deficit of 4.3% this year, hypothetical number. Imagine you have kept a target of 4.3% this year. So under what situation, under what circumstances you will be allowed to exceed the targets? Right? Under what circumstances you will be allowed to, right, change these particular targets? For example, if there is war, if there is a drought like situation, if there is a national calamity, etc., these are the situations wherein you will be allowed to extend, or let's say you will be allowed to alter, expand your deficit targets. And finally, the committee also has recommended that the Finance Commission, the 15th Finance Commission, should be asked to provide recommendations for deficit targets for the states. Right? The state governments should have deficit targets, and for that, the 15th Finance Commission should give the recommendations. Done? So these are some of the committee recommendations, NK Singh committee recommendations. Just go through that. All of them have not been implemented. Only few of them have been implemented. For example, we have implemented fiscal deficit, revenue deficit, plus right the overall debt as a target now. Government of India has a target of overall debt as well. Okay. Am I audible now? Please do let me know. Am I audible? Am I audible? Okay. So these are committee recommendations, NK Singh Review Committee, which is also referred to as FRBM Review Committee. Okay. Now, next concept, the idea of a public debt. Idea of public debt. Now, what is the public debt? Already we have discussed this. Right? The debt of Government of India. Public means a debt of Government of India. Whenever you come across overall debt, it is a central government plus state government. And whenever you talk about public debt, you're basically talking about the central government debt. Okay. Now, what are the features of public debt in India? What are the features of public debt in India? One, out of the central government debt, only a part of it is external in nature. Only small percentage of the total debt, right, is external in nature. Are Baba. There is no issue from my side. Please refresh the button, refresh the page. I have not changed anything. I have not changed the mic. I have not done anything when I took a break. Right? We have not done anything when the break was taken. Am I audible now? Am I audible now? And there are certain students who keep on complaining. Don't say, right, if I'm complaining, then it is your problem. My dear, if you are complaining doesn't mean everybody is complaining. How do you make a presumption that everybody is complaining? Right? Don't behave like that. Right? Certain students' behavior is very bad. Don't behave like that. Right? I'm saying, I'm giving you a solution. Please hit refresh button. Did I not refresh? I refreshed 2 times, 3 times. I'm asking you to refresh. Right? Do not revert saying that it's your problem. Right? If there is an issue, that's the reason I'm stopping and asking you. Around two to three people are saying there's a problem. That's the reason I say hit the audio fix button, refresh it. I also refreshed. Okay. From my side, it is correct because there is a indicator from my side which says my audio is correct. Okay. And most of you are saying audio is correct. Only 2 to 3 people are saying. Hit the refresh button. Do not behave. Do not behave like that. Okay. Now let me start. Out of the total debt, only a part of it is external. How much is external? Let me show it to you. Do not by heart it. This year, this is the data. Next year data will change. Okay. Now, out of the total debt of Government of India, out of the total public debt of Government of India of 121 lakh crore rupees, how much is external debt? External debt is around 6.59 lakh crore rupee. That is, if you basically calculate it, 5%, 5% of the total debt is external in nature. 5% of the total debt is external in nature. So only a part of it, only a fraction of it is external in nature. Second, The government also has a portfolio of majority long-term, long tenure bonds. Majority of these are long-term, long tenure bonds. Now, what is the argument here? Argument is, if you borrow from the market, better borrow for a longer duration. Do not borrow where the repayment has to be done only in a short duration. Why? Imagine you take a housing loan. Understand this. Imagine you take a housing loan. If you want to repay it within 2 years, don't you think there is a huge amount of pressure on your finances? I'll repeat the statement. Imagine you borrow a housing loan, you take a housing loan, you'll have to repay in 2 years only, which means, right, you will have to have a lot of financial pressure in the next 2 years. Rather than that, if you borrow for 20 years, if you take a loan for 20 years, now think of it. Don't you think you will have a lot of time to make repayment? You'll have lot of time to make repayment, less pressure on your side. The government debt is characterized by low foreign exchange rate risk. Let me connect it to point number one. Imagine you have borrowed money, only 5% of this is external in nature, meaning what? You have borrowed in terms of dollars. Now, please tell me, if there is a right, if there is an exchange rate like this today, $1 is equal to 50 rupees, $1 is equal to 60 rupees after 1 year. Please tell me, if you have to repay $1 after 1 year, right? Don't you think foreign exchange rate is a risk for you? I'll repeat the statement. You borrow $1 today, exchange rate is $1 is equal to 50, and after 1 year, when you're supposed to make a repayment, $1 is equal to 60. Is it not a problem for you? Is it not a risk for you? Of course, it is a risk, because in terms of rupees, you are paying more and more money. In terms of rupees, you're paying more and more money, right? So that is the reason, whenever your borrowings from external market are a fraction of your borrowings, I repeat, whenever your borrowings from the external market are just a fraction of your borrowings, don't you think, right, your debt faces low foreign exchange rate risk? And finally, India's public debt is lower than many other countries' debt. India's public debt is much lower than many other countries' debt. For example, if you have read the newspapers in the recent times, please tell me, what is the debt of government of USA? Let me see. If you people have been reading the newspapers in the last couple of weeks, in the last 1 week only, right? What is the debt of government of USA? Is it less than 100% or more than 100% in terms of percentages? Percentage of GDP, of course. Is it less than 100% or more than 100%? It is more than 100%. More than 100%. Right? So that is basically the argument here. India's public debt is lower than many of the developed countries. Okay. So just give me a second. Let me check. Let me check. Just give me a second. Okay. Now, please tell me, am I audible now? I've refreshed again from my side. Right, I have refreshed again from my side. That's the reason, right, for a couple of seconds, I believe, right, there was some, right, a blank, right, everything went blank from your side. Okay, done. Okay, let's continue then. Let's continue. So these are certain very important features of public debt. Okay. Next, important concept, finance commission. Important concept, the idea of a finance commission. So what we have covered so far is basically all of the budgeting concept. Now let me cover the concept of a finance commission. Finance commission. Okay, now let's start. First one, finance commission is a constitutional authority. Finance commission is a constitutional authority. We set up the finance commission under Article 280. Under Article 280, we have set up finance commission. Right now, which finance commission is working? Right now, it is the recommendation of 15th Finance Commission which are applicable. I repeat, right now, It is the recommendations of 15th Finance Commission, right, basically, which is operating, or recommendations are applicable. Finance Commission is established once every 5 years, right? That is, right now we have a 15th Finance Commission from 21 to 26. So after 26, there will be one more recommendation of a commission, right? Earlier we had Finance Commission from 15 to 20, etc. And if you're reading the newspaper, very recently, Government of India stated we are going to set up a committee for 16th Finance Commission, correct? We have set up, right, a committee, or we will be setting up a committee for 16th Finance Commission. Recommendations will not be applicable, right? Commission will be set up, they will give recommendations, and they will come into implementation after many years now. Okay, so it will be set up by the President of India once every 5 years. Next one, Finance Commission will have a composition of 5 people. Finance Commission will have a composition of 5 people, that is basically one chairman plus 4 members. One chairman plus 4 members. There will be 5 people. Again, all of them are appointed by the President of India, but recommendation will come from the Prime Minister. That is basically Government of India. What are the terms of references? What are the right functions of Finance Commission? The first one is distribution of taxes between center and the states. Let me explain this. Distribution of taxes between the center and the state. Now, what do you mean by distribution of taxes between center and states? Right? Please understand this. Central government will impose and collect lot of taxes. Impose and collect lot of taxes. Point number one is clear with all of you. Sir, what kind of taxes? Income taxes, corporate taxes, excise duties, etc., etc., etc. So central government will impose and collect lot of these taxes. Point number two, when central government will collect all of these taxes, this is called as divisible pool of taxes. When central government will impose and collect these taxes, this is called as divisible pool of taxes. Divisible pool of taxes. Now, it is the function of Finance Commission. I repeat, it is the function of Finance Commission to tell how much of these divisible taxes should go to the central government and how much should go to the states. I will repeat it again. Once the central government will impose and collect the taxes, it is the duty of the Finance Commission now to recommend how much of these divisible pool of taxes should be given to central government, how much should be given to the states. This formula is called as vertical devolution. This formula is referred to as vertical devolution. Vertical devolution formula. Now, second point. Whatever taxes are collected by the central government, I said these will be part of the divisible pool of taxes. But please understand, central government will also impose and collect cesses and surcharges. Central government will also impose and collect cesses and surcharges. Now, if you remember what we have discussed in the context of taxation, please go back. Context of taxation. I said central government will impose cesses and surcharges. Now, cesses and surcharges, the central government may not give. There is no compulsion. Central government will collect it separately. Now, whether these will be given to the states or not, that is entirely the power of the central government. Is it okay? I'll repeat it again. The cesses and surcharges which are collected by the central government will basically decide whether they want to give to the states or not. If the central government says, I do not want to give, then there is no compulsion. Finance Commission cannot give recommendation on the distribution of cesses and surcharges. Okay, so first one, taxes are collected. Point number two, it is called as a divisible pool of taxes. Point number three, Now the finance commission will recommend how much should go to the central government, how much should go to the state government. This will be called as vertical devolution. Point number 4, the cesses and surcharges collected by the central government will not be considered as a part of divisible pool of taxes. Point number 5, imagine, I'll take a simple number here. Imagine divisible pool of taxes is 500 crore rupees. Divisible pool of taxes is, let's say, 500 crore. As per the finance commission recommendation, let's say hypothetically, 200 crore rupee will go to the states and 300 crore rupee will be given to the central government. Now the question is, how this 200 crore rupee will be distributed? Out of 200 crore, how much will go to UP, Bihar, right? Let's say Sikkim, Nagaland, Punjab, Haryana, right? Karnataka, Tamil Nadu. How much will go to each of the state? Now there is one more formula. Which will recommend how these 200 crore will be distributed. This is called as horizontal devolution. Done? Any difficulty in understanding what is vertical devolution, what is horizontal devolution? From the divisible pool of taxes, how much should go to the states, how much should go to the center? That is called as vertical devolution. Now, how much has gone to the states? How will you distribute it amongst the states? That is called as horizontal devolution. Right? So, vertical devolution formula, horizontal devolution formula, both are recommended by the Finance Commission. Point number 2, on what basis, for what purposes grant in aid should be given to the states? Grant in aid is nothing but the grants which are given by the central government. I hope you remember the concept of grants. So on what basis, for what purposes central government should provide grants to the states? That also recommendation is given by Finance Commission. Third, we have consolidated fund of the states. Now question is, how do you increase the consolidated fund of the states? Augment means collect. Augment means, right, increase. How do we increase the money under the consolidated fund of states? How do we increase the money under that? Recommendations can be provided. And finally, if the Finance Commission will get any other point, any other matter from the central government, right? Finance Commission will get any other matter, then on this subject also, Finance Commission will look into it and give a recommendation. So these are some of the areas on which Finance Commission will provide recommendations to government. Now, before I go forward, remember this point. All these recommendations provided by the Finance Commission are advisory in nature. I repeat, all the recommendations provided by the Finance Commission are advisory in nature. So when I say advisory in nature, please answer to this question. Are the recommendations binding on the central government? Let me know. Are the recommendations binding? Binding means central government will have to follow these recommendations. Must follow these recommendations. No optional for the central government. No. These are not binding. These are advisory in nature. Which means the central government will try to implement them. If they cannot implement it, nothing wrong with that, because these recommendations are advisories. Okay. Now, please have a look at it. There are two formulas, I said. One is vertical devolution. Second one is horizontal devolution. What is the vertical devolution formula given by the 15th Finance Commission? The 15th Finance Commission has given a vertical devolution formula of 41%. 41%, which means out of the divisible pool of taxes, out of total divisible pool of taxes, 41% will go to the states and remaining 59% will go to, right, the central government. Is the logic okay? Out of the divisible pool of taxes, 41% will go to the states and remaining 59% will go to the central government. Any problem with the vertical devolution formula? And look at how the vertical devolution formula has been changed over a period of time. Initially, it was 29.5% in 11th Finance Commission, right? Then it was increased to 30.5%. It was increased to 32%. And in 14th FC, it was increased to 42%. Now it has been adjusted. It has been adjusted to 41%. If you ask me, sir, why it has been changed from 42 to 41%? Basically, Finance Commission in the report states that when the 14th FC recommendations were provided, Jammu and Kashmir was a state. Is it okay? Right? Jammu and Kashmir was a state. And now, when the 15th FC recommendations would be implemented from 21 to 26, Jammu and Kashmir is not a state anymore. And that is the precise reason we have adjusted the vertical devolution formula from 42% to 41%. Okay. In fact, if you have read the newspapers, did we not complete 4 years of Jammu and Kashmir being converted into union territories? Think of it. Right. So next one, horizontal devolution formula. Horizontal devolution formula. Now, I've given a very small table here. I've given a very, very small table. Do not by heart the complete table. Please do not waste your time. Just to make you understand, just to have more idea, I've given a table here. Do not by heart the complete table. Don't waste your time. If some of you will ask me, why should I not? I will by heart the table. My dear, today we have 15th Finance Commission. So now tell me, can we draw the same table for all the 15 Finance Commission? Think of it. I'm making a comparison of horizontal devolution formula just to make you understand it a bit more. I've given you a comparison of formula for only 4 finance commissions: 12th, 13th, 14th, and 15th. So if you ask me, sir, right, should I need to by heart it? Should I need to remember all these? Then my recommendation is we can draw the same thing for all the 15 finance commission. That is a very complicated exercise. Don't worry. Remember only for 15th FC. Please remember only for 15th FC. And within this also, don't do a PhD thesis on it. Listen to me now. Do not do a PhD thesis on it. Not at all required. If you don't trust me, please check this year's prelims paper. Check this year's prelims paper. Right? You will be surprised to see that question was asked on this last column itself. Check it. If you don't trust me, please check it. Right? The question was asked on the last column itself. That is basically they had asked a question on parameters. How many parameters are considered? How many parameters? I'll come back to that. Don't worry. How many parameters were considered by the 15th FC to provide horizontal devolution formula? 6 parameters were considered. One is population, second one is area, third one is forest and ecology, fourth one is income distance, next is fifth one is a tax and fiscal efforts, and the sixth one is a demographic performance. Demographic performance, by heart them. Do not waste your time, simply by heart them. And what I would recommend is by heart them in a descending order of their weightage. As I'm saying, some people are not listening. So there is no point. Listen. Do not do a PhD on this. Simply by heart it. Why? Some students will keep on asking, tell me what you mean by forest and ecology. I will say, I know that. I've read the 500-page document. I know that. Forest and ecology basically covers the total forested area plus, right, which of the forest have more than 80% canopy area. Now you will start running behind. What do you mean by 80% canopy? Not required for UPSC. Right? For example, there is a term called as income distance. What is income distance? All the states are arranged in the decreasing order of their income distance, starting with one state which has the highest per capita gross state domestic product measured for 3 years, 2016 to 2019. Then we'll make on making a comparison. We'll go on making a comparison How much is the gross state domestic product per capita for one state with the second state? How much is the gap? Based on that, we will do the allocation. Now, please tell me, do you think UPSC will ask you all of this? Think of it. Will UPSC ask you all of this? Absolutely no. Then it simply means UPSC is expecting you to read a complete Finance Commission report. That is more than 600 pages. Some of your books are not even 600 pages. So that is the reason, don't waste your time. Do not waste your time. Simply by heart parameters, and even if you ask questions on parameter, I will not answer it. Not needed for UPSC. Don't waste your time. So these are the 6 parameters. The highest weightage has been given for income distance. The lowest weightage has been given for tax and fiscal efforts. 45% to 2.5%. Now, before I go forward, right, how does the Finance Commission actually use it? How does the Finance Commission actually use it to provide money for state 1, state 2, state 3, etc.? Please have a look at it. I'll just give a very simple example, right? Look at the term that I'm writing at the top of the slide. Let's say hypothetically, there are only 2 parameters considered by the Finance Commission and only 2 states are there in India. So total transfer done to the states, let's assume that is a vertical devolution. Let's assume a total transfer done to both of these states put together is 100 crore rupee. Now population population weightage is a 40% and area weightage is 60%, which means this 100 crore will be divided into 40 crore as well as 60 crore rupee. Any difficulty here? 40 crore as well as the 60 crore rupees. Now, state 1, out of the total population in India, let's assume it has 30% of the population. State 2 has a 70% of population. So, how much is the money allocated? How much is the money allocated for population? Look at the table and tell me. How much is the money allocated for population as per this calculation? Can I say for population we have allocated 40 crore rupee? So divide this 40 crore rupee into 30% and 70%. Give it to state 1 and state 2. Any problem with this? Do not by heart this. Please do not by heart this. UPSC will not test you. But what is the importance of weightage? I'm trying to convey to you people. Right? Any problem? How 40% is important? How 40 crore would be divided between the states? Can we do the same thing for all the states in India? Think of it. Can we do the same thing for all the states in India? 28 states. Don't do it, but please don't waste your time. Don't do it. Can we do the same thing for 28 states? Of course, yes. Now, let's say, right, area. For area, we have allocated 60% weightage, which means 60 crore rupees. State 1 has an area of 20% and state 2 has an area of 80%. Can we divide 60 crore into 20% and 80%? Yes. So 20% will be 12 crore, 80% will be 48 crore. This is how allocations are done based on the recommendations of the Finance Commission. Now, please tell me, if you apply this same logic, don't you think states such as UP, Rajasthan, etc. will get lot of money because of Finance Commission recommendation? Let me know. If you apply the same logic, don't you think the states such as UP, Rajasthan, Maharashtra for that matter, will get lot of money because of Finance Commission recommendation? Why? Look at the population weightage. Please look at the population weightage. 15% weightage is given. Now tell me what will happen to states such as Kerala, states such as northeastern states such as let's say Karnataka, which has comparatively lesser population compared to UP, Rajasthan, Maharashtra, etc. Don't you think they will get lesser money because of these recommendations? Now, I hope you understand why some of the states are against these kind of recommendations. States such as Andhra Pradesh, Telangana, Karnataka, Kerala, etc. Why? I hope you understand why these are opposed to the Finance Commission recommendations. And because their argument is, if you talk in terms of GDP contribution, if you talk in terms of GDP contribution, we contribute very high, right? I hope you understand. Southern states, including Maharashtra, right? Again, apart from southern states, plus Maharashtra plus Gujarat, contribution to GDP is very high. Generation of jobs is very high. Contribution to overall tax collection is very high. But when it comes to payment, devolution of taxes, these do not get huge amount of money because their population is lesser. Now, don't you think the argument will be put forward like this? Right? The argument is, then is the central government incentivizing more population? Think of it. I hope you understand. Is the central government then incentivizing if the states have more population? Then we will also do that. Right? So that is a criticism. That is a criticism. Because post 1970s, we have implemented population control measures. Some of the states have implemented the policies much better compared to other states. As a result of this, in these states, population has been in control compared to other states. So there is a criticism regarding this formula. Please remember this. Okay. Now, please make a comparison. Do not by heart this table. Please make a comparison. Can I now say, please have a look at the table and answer to me. Can I now say 15th Finance Commission is the first Finance Commission to take only 2011 population to give devolution to the states? I'll repeat the statement. 15th Finance Commission is the first Finance Commission. Some of you are saying, no, listen. Listen, Baba, you are not listening. Listen first. 15th Finance Commission is the first Finance Commission to consider only the 2011 population to provide devolution to the states. The key term is only 20, or even now some of the students are saying no. Then all I can tell you is all the best. Right? Because the table is there right in front of you. Even then, if you can't observe, then I cannot come to your home literally, take my hand and say, please see here. I can't do that. You will have to do it. Okay. So 15% weightage has been given for population of 2011. So UPC can use a twisted statement like this. Right. Apart from this, can I say the demographic performance? But sir, it is there in 14th Finance Commission. My dear, what do you mean by the term only? I'll have to stop talking about economics. I'll have to start teaching English now. What do you mean by the term only? Right? I hope you understand. Right? But even then, it doesn't matter. Demographic performance. Have a look at this. Can I say 15th Finance Commission, right, compared to the last 4 to 5 Finance Commission, is the first Finance Commission to introduce demographic performance weightage? These kind of statements can be asked by UPSC. Please be very careful. That's the reason I'm saying just make certain inferences by looking at the table. Make certain inferences. Okay? Done. Can we go forward now? According to that logic, backward states will always remain backward and there will be no concept of welfare states, and backward states that has more resources but they remain backward. What is the argument that you're trying to put forward? Please do let me know, because I did not understand the argument. Okay. Now, in case of vertical devolution, as per the recommendations, in 5 years, the total amount of taxes collected by the central government will be 135 lakh crore rupee. Total taxes collected by the government will be 135 lakh. Out of that, if you take out the cesses as well as surcharges, right, the divisible pool will become 103 lakh crore. And the share of the states, if you calculate 41%, the share of the states will be 42 lakh crore rupee. In addition to the share of the states in the form of devolution, grants will also be provided by the central government to the states. That will be 10.33 lakh crore rupees. So according to the 15th FC, I repeat, according to 15th FC, from 21 to 26, totally 52 lakh crore rupee will be transferred from the central government to states. According to the 15th FC, from 21 to 26, 52 lakh crore rupee will be transferred from the center to the states. Now, please tell me, is it a guaranteed amount of a transfer? Is it confirmed? Is it confirmed that between 21 to 26, pakka, right? No deviation, 52 lakh crore will go from the center to state? Absolutely no. Why? All these are estimates. All of these are simply estimates, right? All these are estimates. Point number one. Second point is, these are some simply advices to the government of India. These are not compulsory to be followed by the government. Government might change. Government might simply change. Right? In fact, if you study next week, sorry, this week, Friday, I'll give you one article regarding it. When you look at the article, you will realize that central government is not even meeting that 41% target. It is not even meeting that 41% criteria. It is lower than 41% itself. Okay? Right? So have a look at this. These are certain recommendations of Finance Commission for vertical devolution formula as well as horizontal devolution formula. Now, I said totally more than 10 lakh crore rupee grants. Totally more than 10 lakh crore rupee grants. So, in what way the grants will be provided? There are certain states which will suffer because of the revenue deficit. There are certain states, just like the central government, even the states will have revenue deficit. In order to provide assistance to these particular states, the 15th Finance Commission has provided revenue deficit grant. And now, please remember this. Initially, to begin with, we will provide these grants to 17 states. Over a period of time, even the number of states would be reduced. Now, think of this, right? Some of you will have this kind of a doubt either right now or after certain time. Please think of it. I'll give you an example. Let's say a developed state such as Maharashtra on one side, and on the other side, a northeastern states. Right? On one side, we have a Maharashtra state. On the other side, we have any state from a northeastern India. Is it okay if I say both of these, right? That is, both of these states will not have the same revenue generation capacity? Let me know. Can I repeat it again? On one side, I have written Maharashtra, and the other side, I have written any northeastern state. Can I now say both of these will not have same revenue generation capacity? And revenue generation is important because every state government will have their own budget to take care of. So now, do you think central government should provide a revenue deficit grant for both of them? Is it fair? Think of it. Is it a concept of equity? Should we provide for both of them grants? No. To the states which are very weaker in terms of their finances, we should provide grants to them. That is the reason all the states in India will not get revenue deficit grant. Finance Commission, based on its calculation, will tell the central government for which state you will have to provide grant. Right? So revenue deficit grant total 2.5 lakh crore rupee. All these numbers are for 5 years. For full 5 years. Sector specific grants for the development of various sectors. Right? For development of various sectors, total of 1.3 lakh crore rupees has been awarded under the Finance Commission recommendation. What kind of sectors? Agriculture, maintenance of roads constructed on under Pradhan Mantri Gram Sadak Yojana, right? Development of statistical infrastructure, healthcare sector, school, that is high schools and right higher education, etc. Next one, certain states, right? State requirements. Certain states will also be given amount of grants. How much? Around 50,000 crore rupee has been allocated for certain states. Grants for the development of local bodies. We have allocated around 4.3 lakh crore rupees under the 15th Finance Commission for the development of local bodies. And finally, for disaster management. For disaster management, 1.6 lakh crore worth of grants have been awarded or provided under 15th FC. Many of you are asking, sir, should we buy heart all of them? My recommendation, please do. Please do. right? Should you mug it up? My recommendation, please do it, because UPSC can ask you a question only on the grants under the 15th FC. They can ask you about it. You should have certain data to write. Okay, so these are certain grants which have been recommended. What financials? What finances of the states? If you remember earlier, the committee, that is NK Singh committee, recommended that 15th Finance Commission should provide a roadmap for the states. Do you remember this? I'll repeat it again. The NK Singh Review Committee, FRBM Review Committee, recommended that the 15th Finance Commission should provide a debt roadmap for the states. That is how states should reduce their debt. A roadmap has to be given by the Finance Commission. The Finance Commission has not recommended a framework for this. What they're saying is, there is so much of uncertainty, there is so much of volatility in the economy. I do not want to give a recommendation. You, all of you have FRBM Act, all of you have FRBM targets. Please follow FRBM targets itself. I will not give you any separate recommendation. The states and the center should stick to the debt levels which are recommended under FRBM. Do you remember the earlier number? What is the target? What is the target for the central government plus state government under the FRBM Review Act now? Can I say 60%? Yes or no? Target of debt, I'm talking about debt, overall debt. The overall debt, the target that has been given now under the FRBM Review Committee is how much? 60%. Out of that, all the states put together should be 20%. Central government should be 40%. So center and states should stick to the debt level which has been recommended by FRBM Act. And whenever central government will borrow through extra budgetary resources, whenever central government will borrow through extra budgetary resources, that disclosure has to be made. Try to eliminate it over a period of time. Try to eliminate it, but till then, please disclose how much money you're borrowing through extra budgetary resources. Why this is important? Please tell me. If you come across a data called fiscal deficit of 15 lakh crore rupee, is it the true representation of how much government of India owes over a period of time? Think of it. You'll come across a fiscal deficit of, let's say current year, 17 lakh crore rupees. Does it mean because of borrowings this year, government will pay only 17 lakh crore rupees after 5 years? No. What about off-budget liabilities? What about off-budget liability? If you're confused of what I'm talking about, understand this carefully. Imagine government will borrow this year 100 rupee by issuing a bond which has a maturity period of 5 years. Which has a maturity period of 5 years. Apart from this, Food Corporation of India, FCI, or National Highways Authority of India, they will also borrow 100 rupees from the market, where they will also make a repayment after 5 years. So don't you think when this kind of extra budgetary resources are done by the government, fiscal deficit will only talk about number one. Fiscal deficit will give you information about only the first one. But after 5 years, will the government repay only 100 rupees? Think of it. After 5 years, do you think government will pay only 500 rupee back? I'm sorry, only 100 rupee back? No. They will have to repay 100 rupee. That is their fiscal deficit. They will also have to repay this 100 rupee which National Highways Authority of India has borrowed on behalf of Government of India. So that is the reason, whatever extra budgetary resources that you use, disclose it. Give clarity regarding that. And over a period of time, eliminate the practice of EBR. So these are certain recommendations regarding the fiscal roadmap. Next, in the context of taxation, what has been recommended? For taxes, what has been recommended? One, you will have to widen the tax base. Do you remember tax base term? Let me see. Do you people remember the term tax base? Right? Sir, where have you discussed taxation? Under the chapter of taxation. So broaden your tax base so that the amount of tax resources will automatically start increasing. There is also need to streamline tax rates in India. For example, GST rates. Do we need to streamline it? Capital gains tax rates. Do we need to streamline the taxation structure? Of course, yes. Streamline means right now the structure is not appropriate, not efficient. Make it more efficient. Increase the capacity and expertise of the tax administration. Provide more training to them. Provide more technology to them so that they will be able to collect more and more taxes by correctly evaluating, assessing all these documents. What are the challenges in case of GST? There's a huge amount of a shortage in the GST collection compared to what was expected when we implemented GST. I hope you understand the statement here. I'll repeat it again. When we proposed and implemented GST from 2017, we expected much larger revenue collection. Compared to our expectations, today, whatever it is collected, it is slightly lower. So we need to address it. We need to address this particular issue. And second, right, volatility. Volatility means fluctuations. Lot of fluctuations are there in the form of GST revenue collection. We'll have to address the issue of even the fluctuations. Done? Can we go forward now? Can we go forward now? Streamline tax rates means we have capital gains taxes, right? Capital gains taxes. Is it right? Is it rational today? Don't you think capital gains taxes structure is very complicated in India? So don't you think we will have to rationalize it? We will have to, right, address the issue of complexity in the capital gains tax. GST, GST, right? So what is the issue related to GST? Do you think every month, don't say now, right? Please understand the recommendations were provided 2 years ago. So please think before you start answering. So 2 years ago, the amount of GST revenue collected were uniform every year, were similar every year, was right same every month. No, volatility was there, and the rates, right, the slabs under GST are also different. Right, we need to rationalize. We need to address the volatility in the GST revenue collection. Okay, done. So these are some of the recommendations. 15th Finance Commission recommendation regarding defense. Last set of recommendation regarding defense. Under defense, 15th FC says we need to set up one fund. We need to set up one fund. The name of the fund will be called as a Modernization Fund for Defense and Internal Security. Right, for defense sector, we need to set up one fund. The name of the fund will be Modernization Fund for Defense and Internal Security, or else it is also referred to as Rashtriya Suraksha Naivedyam Kosh, right? RSNK, Rashtriya Suraksha Naivedyam Kosh. Now, from where will you get the money to set up the fund? Imagine Government of India will sell a defense sector, right, company. Government of India has companies in the defense sector. Imagine Government of India will go for disinvestment of a defense sector company. You will collect money, so you can use this money under MFDIS. Second, from the consolidated fund of India, certain funds can be transferred. Third, right, whenever defense land will be given to state governments, whenever the defense land will be given to the state governments, you will collect money. Use this money in the fund here like this. Right, so there are various sources from which the funds can be collected, pooled under MFDIS. Now, what is the use of this? We will use the funds for making investment in the defense sector. Modernization, right? For example, invest money and get better technology for the defense services. Develop a better infrastructure. Invest in research and development. Second one, capital investment for right Central Armed Police Forces, CAPF, Central Armed Police Forces, and modernization of even state police forces. But these have to be identified by Ministry of Home Affairs. Which state, how much money has to be provided? It has to be projected, given by Ministry of Home Affairs. A small component of this MFDIS can also be used for providing welfare for soldiers. For providing welfare for the soldiers. That is a welfare fund for our soldiers as well as paramilitary personnel. So these are some of the recommendations that have been provided by the 15th FC for the defense sector. Okay. So this is the end of the discussion. Now before I go forward, tell me now whether these two components, right, do they make sense to you people now? Sir, what are you talking about? Please have a look at it and tell me whether these two components, I'll write the numbers, just give me a minute. Whether these two components make a sense to you in a budget announcement by Government of India. Let me know. Right, component number one, state's share of taxes and duties for the current finance year, it is 18 paisa. Component number two, finance commission and other transfers, grants, right, that is right 9% or 9 paisa. So I hope you understand why Government of India, whenever they spend the money, they will also have a carve out. They will also have certain expenditure under, right, transfers to the states and other transfer to the states based on the Finance Commission recommendation. Done. So these are the various components regarding the concept of the budgeting exercise. Please be very careful. Questions have been asked. I'll show the questions in some time. All these concepts are equally important. Don't say whether this is important for prelims or mains. All the chapters are equally important. Okay. Now, let's all solving the questions. Yesterday, certain questions were left out. Let's start from there only. Okay. I believe this was where we are supposed to start. Start now. Start solving questions. Let's finish this. Then I'll take up questions from the fiscal policy. %65% have answered correctly. Why? It should have been higher, my dear. Which of the following steps are used for contractionary monetary policy? Contractionary. Do you remember? Contractionary, expansionary. Contractionary means money supply should reduce. Expansionary means money supply should increase. Now, if you ask me, sir, where have you discussed these two terms of contractionary and expansionary? Last week you have not discussed it. My dear, it is already over. That when, if you remember, we had discussed a concept of pro-cyclical, counter-cyclical. Correct? Pro-cyclical, cyclical and counter-cyclical. Second chapter, that is GDP. And there itself, I told you, contractionary means money supply should come down. Expansionary means money supply should increase. Now, let's start. Which of the following steps are used for contractionary monetary policy? Increase CRR, money supply will come down. Increase repo rate, money supply will come down. Decreasing SLR, increased money supply. So 1 and 2 are correct. Right option will be option B for this question. Next one. Okay, this is done yesterday.
45% have answered correctly. I'll tell you one of the reason why many of you have made a mistake. You will not read the question completely. Many of you would have made a mistake by not reading the question completely. If RBI decides to adopt an expansionist monetary policy, which of the following RBI will not do? I hope you understand. If RBI wants to increase the money supply, which of the following RBI will not do? Cut and optimize SLR. Tell me, if RBI wants to increase money supply, can I say RBI will use the first one? Of course, yes. Second one, increase MSF, marginal standing facility rate. That is, under this, RBI will charge a higher rate of interest for emergency borrowing done by the banks. Right? So, if RBI wants to increase money supply, will it increase or decrease MSF rate? If they want to increase money supply, they will decrease MSF rate. But if they increase MSF rate, right, the banks will take lesser amount of money from RBI. So, obviously, second one is correct. Third one, cut the bank rate and repo rate. If RBI will cut the bank rate and repo rate, money supply will increase. But the question is, which of the following RBI will not use? So obviously it is the second one. Right option for the question will be option B here. Next, let me take up questions from budgeting. Okay, let's start. Okay, let's start. Why 20%? Let me see whether my option is wrong or your option is wrong. The Department of Revenue, array, my mistake. My mistake then. My mistake. The Department of Revenue is responsible for the preparation of a union budget that is presented to the Parliament. Statement 1 is wrong. Statement 1 is wrong. My mistake. If you receive right the solution saying that your solution is wrong, my mistake then. My mistake, okay? It is not a Department of Revenue. It is the Department of Economic Affairs, okay? My mistake. I gave you a wrong option. And the key answer I put in was wrong. No amount can be withdrawn from the Consolidated Fund of India without the authorization of Parliament of India. This is correct. This is straightforward. No amount can be withdrawn without any permission of the Parliament. All the disbursement means any withdrawal. All the withdrawals made from the public account also need authorization from the Parliament. I've told you the point regarding this. I've not discussed complete the public account. I know that. You will learn it under polity, right? Though basically within public account also, government doesn't require any permission of the Parliament to make payments. So third one also needs authorization. Wrong. Right option is option C. So those who have chosen option C, right? Yes, you're absolutely right. My mistake, right? It is not option. I think I gave a wrong option of option A. My mistake. It's wrong. It is option C. Can we go forward? Department of Economic Affairs. The DEA, Department of Economic Affairs, prepares the budget, not Department of Revenue. Next one. Okay, 64% have answered correctly. There has been a persistent deficit budget year after year. Which of the following actions can be taken by the government to reduce the deficit? Reduce the revenue expenditure. Of course, yes. If you reduce the revenue expenditure, automatically deficit will come down. First one is correct. Introduce new welfare schemes. If you introduce new welfare schemes, a deficit will increase and not reduce. Second one is wrong. Rationalize a subsidy. Rationalization means ensuring subsidies will reach the right beneficiaries. Very simple idea. Rationalization means you're trying to ensure through various policies only the right beneficiaries will get subsidies. Sir, what do you mean by that? Let me ask you a very simple question. LPG subsidy, because LPG subsidy is so many times discussed in the newspaper. In the last 2 weeks also it was there. I hope you have read the article which appeared in Hindu newspaper regarding LPG subsidies. If not, please read it. Now, please tell me, LPG subsidy, should it be given to everyone in India? That is, every house, should it get LPG subsidy? Don't think of equality, think of equity. I hope you understand. Don't think of equality, think of equity. Equity means fair. Is it fair to provide LPG subsidies for all the households in India? No. Right? Don't you think very rich people above certain income level, the house should not be given LPG subsidy? So if I do that, imagine, if I do that, that is, so those houses which will have income of more than 10 lakh rupees, I will not give subsidies to them. Can I say I am rationalizing subsidies? Is the logic okay? Right? Can I say I'm rationalizing? Rationalizing means efficiently we are disbursing the subsidies. How do we do that? There's a concept called as a direct benefit transfer. Not today. We'll have a separate discussion on subsidies later. We will have a discussion. What is a DBT? What is the importance of this? What is the issue with LPG subsidy, etc. We'll discuss it later. So rationalization of subsidies will also reduce your deficit. So 1 and 3 are correct. Right option for the question will be option A here. Okay, this I need to discuss. Don't worry. This I need to discuss. Let me answer it. Don't worry. I have not discussed. Let me answer it. What do you mean by vote on account? What do you mean by interim budget? Simple idea. Okay, what do you mean by vote on account? What do you mean by interim budget? Let's say next year, 2024 elections. All of you know this, right? You should know this by now. Next year, Lok Sabha elections are going to be held. Now, have a look at this. In 2024, when Lok Sabha elections are held, don't you think after election, new party can form the government? Again, don't argue anything here. Possibility is there or not. A new party can be right, can have majority and form the government. Now, question is: imagine elections are held in the month of April and May. Just a simple example. Okay. Imagine elections are held in the month of April and May, and I hope you understand. April and May means new financial year, right? Let's say in the month of February, the government which was there, the party which had made the government will announce a budget for next financial year. So don't you think when the next financial year elections are held, new government is there, should they continue with the old government's budget? Is there any compulsion? Should they adopt old government's budget? No, there is no compulsion on it. So that is the reason there are two options generally. Please remember this. There are two options. The government can announce only expenditure for next 2 months. I hope you understand. Government can announce a budget, that is expenditure, only for 2 months. That is for the month of April and May. Expenditures are announced in the form of a budget. And after that, a new government is there. They will have their own budget. And this is called as vote on account. Any difficulty here? Please do let me know. The government, right, one option for them is they will announce only the expenditure side of the budget. They will not talk about incomes, they will not talk about receipts, they will not talk about disinvestment, nothing. They will simply give you information regarding expenditures to be incurred for the next 2 months. This is called as vote on account. Look at the statement one. Vote on account deals only with the expenditure side of the government's budget. Is the statement correct? Yes. Let me go to the second one. Interim budget. That is, let's say 1st February 2024, the government, rather than providing vote on account, there is one more option. What is the other option? They will announce a full budget. Full budget. Full budget means what? They will give you details of full financial year. For full financial year, they will give you the details of expenditure as well as receipts. Right? I repeat it. The second option available to the government is they'll say, doesn't matter, elections are there, doesn't matter. I will announce a full budget. I will announce a budget in the form of for full financial year, how much expenditure, how much will be the total receipt. That is called as interim budget. Any difficulty now? Interim budget does not give complete financial statement like a full budget. Wrong. It will give complete details or like a full budget. Right. So first is correct. Right option for question will be option 1 here. Done. So let me stop the discussion here. Descriptive questions are there. Tomorrow we will take up the descriptive questions. We'll take up the descriptive questions tomorrow. So if you have any kind of questions, please do let me know. Can you repeat the criticism regarding horizontal devolution? The idea of a horizontal devolution is that we will take various parameters and then we will decide based on the parameters how much each of the states will get. But the concern is that population as a parameter, some states have very high population. So obviously those states will get more devolution compared to other states. So now the argument of other states is that is, let's say states such as Kerala, states such as northeastern states, Karnataka, which have comparatively lesser population, they will argue that then what is the point? What is the point? We are contributing so much amount of value to the GDP. We are generating so many jobs, but when it is a question of devolution, we are ignored. We will come at the last. Other states such as UP, Rajasthan, Maharashtra will come at the top. Done? Sir, what is the ratio of FD/RD today? Right? I've given you the data. There's a table. Please have a look at it. But don't worry. From next year, from 1 year to next year, data will keep on changing. Do not worry about it. Okay. Meaning of administered pricing in the context of FRBM. Administered pricing would be Government of India will decide what will be the price of certain commodities. That power is there with the government. Okay. Okay. Sir, how is an interim budget different from full year budget? My dear, the year 2023 and 2024, please answer to this question now. For financial year 23 and 24, can you call the budget as interim budget? Please do let me know. For the financial year, that is for the current year, the budget which was announced very recently, that is on the 1st of February 2023, can you call this as interim budget? Some of you are saying yes. How? My dear, how? Interim budgets are announced in a year where elections are supposed to be held. In 23-24, is there central government election? That is a Lok Sabha election? No. Right? So current year's budget, it is not an interim budget. Next year, government can announce interim budget. Okay. How demographic performance of 2011 is used for horizontal devolution. Under demographic performance, they calculate a parameter called as total fertility rate, TFR, total fertility rate. The state with the lowest total fertility rate will actually be given more horizontal devolution. Okay. Sir, if vote on account means expenditure of new government, change means a receipt will be same. Please understand. Vote on account simply means the government is simply telling you for next couple of months how much expenditure will be incurred. Now, let's say elections are over, new government will be formed. The new government can have a mid-year budget. Mid-year budget means for remaining months, full budget will be announced by the new government. Okay. Okay, can we go forward? Any other issue? Any other concern? How, sir? Now FD is 5.6%. So how much time is required to reach zero? All we can do is basically have a plan, but please understand there is no guarantee that you will be able to reach that 0%. And FD you should not reach to 0%, by the way. Okay. What are non-marketable securities? Understand this. Government will issue different types of securities in the market. Some of these securities can be traded. Some of these cannot be traded. So those can be traded, we'll call it as a marketable. Those cannot be traded are called as non-marketable. Okay, done. So let me stop the discussion here. Right, let me stop the discussion today here. We'll continue with the next chapter, financial market, and tomorrow we'll take up the questions, a descriptive question, solve them tomorrow. So that's it from my side. Take care. See you again tomorrow. And by the way, last point. Hindu newspaper, today's Hindu newspaper, right? Sir, is there any article which is relevant, which is important for us from today's Hindu newspaper? There is one very nice article, but very big article regarding mining in India. Changing mining policy of government of India. Please read that article. Today's Hindu newspaper, right? There is a one article on mining of minerals, changing policy in mining of the minerals by government of India. Please read that article. Very big article, full page article, but it is very important. Done. So let's stop the discussion today here. Tomorrow, let's meet again sharp at 6 a.m. Take care. See you tomorrow.